All right. We are here today at the BDH. Another day, another dollar. We got some special guests today, all the way from England, from Chicago, from the floor itself. This guy knows the market makers, so we have the insiders here today. They said they saw ICT at the airport on the way down. Talked to him a little bit about where the market's going to go this week. Made some agreements, came up with what the plan is. So today we've got three, I don't want to call you legends, but I mean, you've been around.
Yeah, thank you.
You guys have been around. Introduce yourselves. You're live in front of 5 million people. Go,
right.
James.
I'm James. Some of you will know me. I'm James Thorpe. I'm the CEO and co-founder of TradeDay. I have been in the market since 1990, so way too long, so like going on 35, 36 years. I was a broker for 4 years, a full-time professional trader for 15 years. I worked for an exchange for 2 years, and since 2010 have been managing trading groups around the world. Until 2020 it was on the sort of professional trading group side, and then from 2020 and on, TradeDay. So that's me, and that's my history in a very short introduction. Thank you.
I like that you mentioned the fact that you worked with the trading groups. So you have a lot of experience seeing a lot of different traders.
Yes, correct.
And a lot of different, like, kind of, I don't want to date you here, but you've seen different markets.
Different markets.
Right? You've seen the crazy markets. You've seen the slow markets. You've seen the volatile, the bear markets, the bull markets.
Yeah, absolutely.
And I guess the one question, real quickly, that I'd ask you: what is the secret to making money in all markets?
Being right.
Get big, right?
Being right.
Being right.
Yeah.
I like that. That's secret right there. All right.
Yeah. No, I can. We can get into get into it a little bit more as the morning progresses.
I like it.
No.
Hey, my name's Steve Miley.
You have to go there you go.
Here we go.
The mic. Don't be scared of that microphone. That's your best friend today.
Yeah, Steve Miley. I'm a co-founder with James of TradeDay. I've been in the market since '91. Probably before a lot of you guys. No, 91. Yeah, before
I was born in '88. So.
I know.
Oh,
I'm old enough, right? I know I don't look old enough, but yeah, 91. I went straight from uni onto the trading floor, where actually I met James. So we were on the life trading floor, LIFFE, which was the equivalent of the CBOT or the CME in Europe, in London. And we met there, and we actually worked together at Cargill Investor Services, which is like so Cargill is a big US privately owned company that is actually like more of an agricultural and commodities company. So we started there, and I moved on to Merrill Lynch, now Merrill Lynch Bank of America, back in '94, '95, I think it was, and then ran their Italian bond market desk on the broking side and the futures side. And we were on the floor together until about 99, 2000, and then everything went electronic. It went all onto screens, and I segued into technical analysis at Merrill Lynch Bank of America, and did that for 12 years until they merged with Bank of America, and then I left, and then pretty much then briefly at Credit Suisse, and then on to setting up my own technical analysis company, where I was able to then start trading as well. And was trading ES, Dow Jones, and a little bit of NQ. It was more ES and Dow. And then we set up TradeDay back, as James said, 4 or 5 years ago, and it's been a great experience and a great privilege to work with one of my best friends, and we've really enjoyed the whole process.
That's another thing we got to ask questions about later, is how the hell do you guys stay friends and keep working together all this time, especially being traders?
3,000 miles.
At what point did you ever have like opposing positions, and you're like, fuck you, I'm short, you're long, calling each other like, I'm gonna get you?
It's been no, not really, right?
No.
I think we do sort of counterbalance each other a little bit. I mean, I think the more important question is how I managed to stay married.
Yeah.
Because my wife was a trader for
that's
she was
a
broker
wild story
for
too.
sort of 10 years, traded for about 9 years, and she works in TradeDay, so she has to sit with me and deal with me day in, day out. So, but no, I mean, you know, it's great. Steve's in the UK, I'm in the US. We can, you know, we are on Slack all the time, bouncing ideas back and forward off each other. It means that, you know, somebody senior is involved with the business, you know, which essentially is a 23 or 24 hour, you could call it. The market's obviously closed for 1 hour, a 23-hour business. And, you know, Steve's up during the UK time and into the US day and quite late into the UK evening. And I'm up early US morning, late into the US evening. You know? So we got some sort of making sure that we have sort of senior management coverage and being able to serve our traders.
You guys, that way. I would say you guys, of all the prop firms out there, probably have the most like hands-on approach.
Yeah,
right.
Absolutely.
You've got your daily calls. You've got, you know, you're putting out a lot of educational info directly from you guys yourselves, not just like. You know, there's other owners of prop firms out there that, to be honest, they have no fucking clue what a candlestick even is. So I give you props. You know, I give you props that you guys actually have some fucking clue of what's going on. Because it's like, at the end of the day, the whole point of a prop firm, you know, I think we like we talked about earlier, but like it's lost the meaning, right? Like a prop firm used to be, you come to a prop firm, you then learn from like the prop firm, you learn from the other experienced traders, and then you build up your book, and then you move up. Right? Where now it's just like everyone's free for all. Like, hey, come here, you know, get your sim payouts, and then go fuck yourself. So it's kind of like that's the new genre of prop firms. Where you guys worked in actual prop firms back in the day. You went and somebody was like, hey, if you fucking lose money, I'm gonna beat your ass at the end of the day. But you were like, don't lose more than $200. You know, like that was the real prop firm. Somebody basically backing you. And saying, hey, I trust you to not lose more than $200 a day.
100%.
I mean, I think the big difference is, you know, when you're managing and running a professional trading group or PTG or prop group, it's much more active management, right? You know, your trader is sitting on the desk. As a new trader, you're sitting on a desk with experienced traders guiding you. You have your risk manager or your head of desk looking at your positions, telling you, you know, right, enough's enough, you're done for the day, or go walk around the block. Whereas it's much more passive as an online prop firm. You know, the traders sitting at home, they're on their own. You know, they might be in a Discord or they might be in some sort of online community, but it's not the same. There's no accountability other than to themselves. And for that reason, I think it's harder. Actually, I think it's harder for the guy at home than it is for the guy in the office.
Yeah. Well, I guess, you know, the funny question too would be, you know, working in an office and seeing other people every day. I think there's like that accountability too, right? Like you have accountability where, you know, when you're trading in your second bedroom at home and you blow up your accounts, you close the door and you go out and watch TV. You know, when you blow up the prop firm accounts working in an actual office, it's kind of like, I got to talk to someone about this. That's gonna be an awkward conversation at the end of the day. You know?
100%. I mean, there's definitely a more of an accountability, as you say, and it's lonely, right? Trading's hard. It's a lonely place to be, you know. And I think that's why you do see, you know, the likes of the channel here, right? You know, Discord groups, etc. You know, they're all very, very, very popular because people need that sense of community, the sense of belonging, the sense of it's not just me. I'm not the only one, you know, fucking up today. You know, other people are screwing up. You know, other people are blowing their accounts, you know. So it's we're in this boat together as opposed to I'm sat alone and feeling the pain, you know, slowly alone. And everyone can shout about the winners, but it's when it's managing the losers. We were, you know, again chatting earlier about that, right? It's managing the losers that are key to long-term success as opposed to managing the winners. Yeah.
Well, we talked about earlier. I asked James, like, you know, what would be the ideal plan if you had a brand new trader who came to you and was like, hey man, I want to become a trader and work with you, blah, blah, blah. Like, what would be the plan you set them up with? And you were like a 6-month, you know, sim account and be like, hey, don't lose more than $200 a day, you know, and do this for 6 months. And then we'll talk in 6 months. But it's like, you know, now I want my instant funding. I want my instant payouts. I mean, hell,
let's go.
You don't even have to trade anymore. Just give me money.
Like,
James, you owe me. I just signed up. Like, what? James, I just paid $100 for an account. I want my $10,000 payout now. So.
Yeah, I know. It's crazy. It's a crazy world that we live in. we get feedback. Oh, your valuation should be 1 day or 2 days. It's BS. And
It's not really an evaluation at that point.
I know. Well, I understand. We exist in an industry where it's hyper competitive, right?
Yeah.
And you have to have a program that people will purchase. But theoretically, or you step back and you think about what that person's asking. They're asking to be put in a situation to be funded after a track record of 1 or 2 days. And it's a bit like you want to reverse the question to them and say, if you were investing your money in somebody, let's say your 401k, and the 401k manager said there's a great new trader on the block, he's got a 2-day track record, can I put some of your portfolio in it? You're going to be like, hell no,
Yeah.
So of course, what we do is, completely sort of different. It's just, it always makes me smile when people say, I only need a day to prove that I'm a good trader with you, and I'm like, okay.
Yeah. No, hey.
Yeah.
Just 1 day. 1 day is all it takes.
Yeah.
All right, so obviously we established you got some experience. You've been around the block a few times. You've probably seen every gimmick. You've seen every, sales pitch on how to get rich in the market.
Yeah.
And that's funny thing too. I was gonna ask you too. As I guess as the internet obviously becomes bigger and bigger and bigger. Back in the day, before the internet and all that, it's funny because there still was kind of like gurus.
Yeah,
Right,
100%.
like there was like day trading gurus selling like VHS tapes,
Yeah.
selling mentorships,
Yeah.
in person,
Yeah.
selling books.
Yeah.
So do you think that that there has always been kind of just people out there promising riches in the markets?
100%.
Yeah, 100%.
Yeah.
100%,
Now it's
yeah.
just different delivery.
Yeah.
Different delivery, yeah.
Because I remember like the Nigerian brothers, I think it was Nigerian brothers, their name. Yeah. And they, back in the day, they would send people like a book in the mail.
Yeah.
Claim your free book offer now.
Yeah.
To learn how to trade.
Yeah, so I've got a story for you. I mean, this is before even going to the industry. I was really, really interested in trading. And, somehow I was pitched, probably in the back of a newspaper or a journal or something in the classifieds, a system. And it was a guy called Wells Wilder, and he did, I can't even remember what it was called, but essentially the book was a technical analysis book that tried to identify trends based on moon cycles.
Okay.
Right? And it was an expensive investment for me. It's like 250 quid in the 1988, 1989.
What was it that drew you to that?
I wanted to be a successful trader. I wanted to know how to start. I wanted to understand markets.
But
so
you weren't like the moon cycle. This must be bullshit.
Well, do you know what? I didn't, because I was young. I didn't know shit, So
Well,
I'm
that's like people with ICT.
yeah.
It's
So,
the ICTs of the world.
yeah, but I will say this. Let me just finish this anecdote outright, because I like, obviously I didn't really even apply it. I tried to apply it a little bit, and then what happened is I went for an interview with a firm. And I said, they said, what first? No, it worked. No, listen. He said, what first got you interested in markets? And I said, well, to be honest, it was a book called, I can't even remember what it was called because it was like 30 years ago, right? But by Wells Wilder. And it was about, and it's about this. And he looked at me and he goes, that's really interesting, as one of our biggest clients follows that system. You're hired.
No way.
And I got the job.
I'll add to that, because there was GAN. So
Right.
GAN, definitely. So you've got his GAN lines, because he's my technical analysis nerd. But he also used astrology as well. So GAN, and he's like super respected even today, right? And
So I think,
for me, that's
So I think that I think,
bullshit.
if I remember rightly, right, the premise is this. The moon controls the tides.
Oh,
Gravity
come
controls the
on.
tides,
The moon,
and 70% of the human body is made up of water.
Yeah, okay.
So I'm just telling you.
Based on the moon right now, what should we do? Long or short and open? That's what the chat wants.
I think we should go to the pub.
Moon.
I know, but it goes to the heart of the question that Patrick had. Is like, have people always been selling systems?
Yeah.
And they have, and have people always been buying them? Yeah, I was like one of the first.
People used to sign off for little tips, share tips, sheets. They would be in the back of the Wall Street show. And when the UK, you used to
call this number,
call out the coupon and send it off. So there's always been, but some of it, this is the problem, right? And it does translate to today, because there's like a lot of it, 80-90% of it is like snake oil, right? And that's the trouble. It's cutting through for you guys out there, right? It's cutting through the BS, right? And finding someone who's honest, that doesn't say, every trade I do is a winner. Follow this system. It's going to be. My thought is always this, right? If you've got a system that works and it's going to work over time, why the hell do you need to sell it? There's no reason at all to sell it. To monetize it. If you've struck gold, why are you then selling the shovels? The only people that sell the shovels, that are those that haven't struck gold.
Well, you also know the truth is, like, if there was a trader out there that was just like amazing, right? He's just an amazing trader, and he knows exactly where the market's going to go at all times. Oh. Like, someone's going to hire him.
Yeah.
Right? They're going to get hired.
Like who? Like who?
Well, not a prof firm, but
but who might be a trader who knows where it's going all the time? Is
nobody.
Is there anyone you think that might profess to be
ICT? Well, I don't know why ICT has not been hired by. I think Trump should hire ICT, right? To then trade the U.S. money.
Yeah.
Right? Because think about, like, I still don't understand this. Why doesn't Trump just, like, buy a bunch of puts on the NASDAQ and then tweet saying that he's gonna, get rid of the NASDAQ.
Yeah.
The market drops 300 fucking points instantly. He cashes out. Bam! America's on top.
Yeah. Pays off the national debt.
Yeah, we're gonna pay off the national debt by market manipulation.
Yeah. Look, I know there is a section of the community that really, believe in ICT, and I don't want to, alienate them. Is I think it's a really good thing. But look, what ICT has done for a lot of people, I think, is open them up to thinking about strategy, right, and forming and building a strategy. And I think that's good. But I will say this. I was from the professional trading world. I've worked with traders at banks and at hedge funds. When I was at the exchange, my job was to build volume into the exchange by traveling around the world, talking to proprietary trading desks, banks, hedge funds, asset managers, commercial hedgers, everybody. I never once in my up until 1990, so what would have been 2020, what would have been almost a 30-year career in markets, had heard the word ICT, right? And if I'd ever said to any trader in a bank, who's this ICT character that programmed the algorithm that controls the market, they would have kicked me out the door, and laughed at me out the door.
The problem is he can't trade anymore because he made too much money.
Oh, that was it. Damn, yeah.
Don't you hate when that happens? Your broker calls you and says, James, you've made too much money. We're going to have to cut you off.
Yeah. So that's why I don't understand as well. I read somewhere that it had been kicked out of every broker. Yeah, so why would a broker kick someone out who's making money? Because that person's trading and generating commission. Every broker in the world would want him.
Sorry.
So, I just want to say this. Look, to put a sort of box around it, I love the way that Wells Wilder got me interested in markets and got me thinking about strategies and developing strategies of my own. Yeah. And I think ICT and other courses do similar things. But to believe that there's one person that programmed the market and knows was talked to by G's, it's just absolutely ridiculous. And, my jaw dropped when I started to tumble down this sort of retail trading rabbit hole. I'm like, people believe this? So it's crazy.
Yeah. I mean, hey, but that's the funny thing, right? Because I'm sure if you went back in the 90s, you could have found some guru who was selling something.
Yeah,
and you're like,
100%.
who's buying this?
Yeah.
But so that's since the dawn of time. People have been selling snake oil, right?
Absolutely.
Way back in the day, they sold the cure for every disease in a little bottle from some guy in a wagon.
Yeah,
100%.
Just went through your little gypsy going through your little town. Going,
in his wagon.
Oh, you got some erectile dysfunction? Take this little pill. Oh man.
So
and it's funny too because we were talking too earlier about just how the London used to be really the epicenter of trading, and New York, and now do you think, I guess because of computers and everything, it's really just kind of leveled the field and given people around the world an opportunity, access. And then we also talked, like you were saying, about the the tides and the stuff like that. There is I think factual information on the idea of finding some kind of little trick to the markets, right? Like we were talking about yesterday. Back in the day, people were flying drones over the oil reserves and trying to scan them to figure out how much oil was in the things. And it's that's an edge, right? Someone figured out an edge. They're using satellite images to figure out how many tankers are moving across the Juarez Canal before the numbers come out.
But
it's funny because, like you said, you gave credit to your kind of first book, but it also like opens your eyes to like trading is not just a linear thing or just not like a simple thing of like look at the chart and that's all that matters.
Yeah, no.
Especially when you're trading, some of the actual other, I guess, asset markets, like oil and the agriculture stuff. And it's funny because I think people really forget that futures at the end of the day were created for the agriculture side.
Yeah, absolutely.
And it's like that's still where a lot of the volume still is going to the agriculture contracts.
Yeah, that's why it's in Chicago, right? It's because in the Midwest it was a trading hub.
And that's 1852 or something like that. Started in Chicago.
Yeah, 100%. Yeah. But it's obviously morphed into something a lot different. I mean, I think going back a little bit to the trading side, it's a matter of finding what's right for you. You're right. Someone's going to try and sell you something, and there's a lot of information. And it's trawling through that information and getting what works for you.
Yeah.
I'm not going to say that anything doesn't work. If it works, it's wherever it works for you. And different things resonate for different people, right? Whether it's bull flags, bear flags, head and shoulders, tops, whatever it might be, right? Or if you're just a flow trader, if you're looking at the ladder, I'm not going to say don't do anything. The thing is, if it's got a fit for you, it resonates with the individual, and then it's the risk management around it. That's critical.
Well, that's a perfect example, right? James made that point earlier. He's like, look, at the end of the day, the market's, or I think somebody made a point that the market's basically consolidating 60% of the time.
Yep.
And I've said that before. Normally the market is chopping 60% of the time.
Yeah.
So it's like you can have the best strategy in the world,
but
like 60% of the time, your strategy might not work.
100%.
Just it might not give you a setup. So, so what do you do? Do you trade anyway?
Yeah.
Do you wait?
Yeah. No, I think the best thing to do is, for me, just do this. Stick those hands underneath your thighs.
Well, and James made the point too. He said,
sit on your hands.
Back when James was a full-time professional trader, you looked at your P&L at the end of the year and you go, hey, majority of my P&L came from 3 months out of the 12-month year.
Yeah.
And it's like, that doesn't make you a bad trader.
No.
It doesn't mean your system doesn't work.
No.
It just means that a majority of the time,
the markets are more conducive to your strategy, the way that I approach the markets. And and I thought that it was me, right? And then, but being in trading rooms, you realize it's not you. And then really the big eye opener for me was when I quit trading in 2009, joined an exchange for a couple of years that took me around the world talking to different teams. And one of those companies hired me to run their trading initially out of Shanghai. And I went to Shanghai, and that was really the first time that I had hands-on managing a team of many traders. Like 60 traders were in that office. And so I was overseeing 60 P&Ls and 60 people trading. And those traders were at different parts of their journey, right? Some of those were trainees that had been with us 3 months. Some of them were people that had been there sort of 3-4 years. I don't think the office had been open more than 4 years at that point. But it was really interesting to see things that happened to me in my 15 years of trading were playing out with these traders in the trading room.
Same. I've only been doing it for like 7 years, and I still, people tell me, they're like, oh man, I've been trading for the first couple of months. It's really easy. I figured it out.
Of course you have.
Okay.
Yeah, that's
Good luck,
right.
Bro.
Yeah. I mean, a classic one, just for those that are home struggling this month, is that, for me, January was always my most difficult month.
Yeah.
And it wasn't every year in my 15-year career that January was my worst month, but certainly as a statistic, it was like weighted towards January was my worst month, right? And then when I got to Shanghai and I was looking at these traders and went through my first January there, I was like, holy shit, it was the worst month for my office.
Yeah.
And then as I managed Mercury, I went on to manage Mercury, and that was like 700 traders across 11 offices at the time. Our worst P&L month was January. So I know that January can be a very, very tough month. And why is it a tough month? There are multiple reasons why I think it's a tough month. But a lot of it comes down to, I think, that one, structurally, the banks and funds have closed out their P&L for the year at the end of the year, but the bonuses aren't paid until February, right?
Yeah.
So the bank traders and the fund traders are not going to do anything to potentially disrupt their 2025 bonus. They want to lock that in and get it into their bank. The second thing is, these traders in banks and funds that are doing what we call the real money, deploying capital in the markets that set the trends, they are not in a hurry. They've got the whole year to build their book and their P&L, right?
Makes sense.
But as a day trader, you may have been off for 2 weeks over Christmas,
You in a
right?
rush?
You may have quit on the 18th of December because you were traveling to see family, and January the 1st, 2nd, you're biting at the bit to get back, and you're like, okay, and you've probably been ruminating on 2026 is going to be my year. I'm going to hit the ground running, and you jump in those markets and you start banging away trying to make money, and you end up like chopping around and just like churning commissions and ultimately losing money and blowing accounts. And I think that's because the markets haven't got the momentum behind them yet. They're sitting and waiting, and the big traders aren't deploying the real capital. So there's a lot of structural things going on and a lot of psychological things going on the trader. But the point is this: if it's happening to you, it's likely happening to everybody.
Yeah.
And I found out that January was my worst month typically, and it was for a lot of our traders that we were managing. So if you're having a shit January, traders, that might be why. Take it easy.
Take it easy. Speaking of taking it easy, the market is open. We just broke out, bull flagging straight up here from the 745s up there through the 800s already. I took a quick little scalp here. I was all motivated. James over there talking about P&Ls, and I was like, ooh, let me make some money real quick. Had a little push here, little breakout, nice little breakout there on the 5-minute chart. Was watching. So now we got a pivot point coming up there, guys. We still have the Friday close. So Friday close is sitting to the upside there, and we'll see. Fuck, this thing is it's pushing. That was 50 more points through the 800s. I got a quick scalp through the 800s from the 67s up there in the 800s, but she is still on a tear, moving up for now. So I think for me, the best thing to do now is just kind of let this 5-minute range play out, chat. So don't be in a rush. No rush here. I don't know about you guys, but I'm like I like playing that 15-minute range. I think the 15-minute range really lets the market set up. Yeah. Let you kind of see what's going on. If it's going to be a choppy day, it's normally like you can see it inside of that 15-minute range, right? So it's like I want to see some type of direction, some type of overall momentum. Yeah. We talked about it earlier, like, hey, you can be a momentum day trader all you want, but if there's no momentum, then you're just not trading it. No. So, like, from your guys' perspective, do you think that there's a benefit from being a momentum trader versus being a range, because there's people who are like, I love ranges. They want to be stuck in a range every day of their lives, and I'm like, oh, I hate it.
I can't do that. Technical analysis, talks to trend, right, and momentum. It doesn't really talk to range. And then when does the range stop being the range and the breakout, and when's it a fake out, false breakout? It's so difficult. I think for me, it's a matter of just trying to find the corrections within the trends, So I know we're breaking out in here to the top side right on the opening, and but I think the difficulty with the open and on the data is then that can reverse very, very quickly. So you've got to be super fast in and out. For me, it's a matter of waiting for that to settle through these opening ranges, sort of thing. Get where the real momentum's going to be coming now for the day. Start of a new day, start of a new week, second week of the year. So I think it's as much about finding the initial range, like maybe you set up on the day or on the week, and then trading around that and looking for the momentum play within that. So, and the thing, going back to the consolidation trading, the thing we were talking about a little bit earlier on, I think your P&L tells you. You were saying earlier on, Patrick, right? Yeah. If you've made money with momentum breakout early on in the session, like now, right? Then what you need to do is then look for when that P&L starts to deteriorate, right? Yeah. And if your P&L will tell you that your strategy does not work that day. Let your P&L, don't chase that. If you've put on 2 good winning trades because there's momentum, and then you have 4 trades that are just scratching or small losers, that's telling you, the market is telling you your strategy is not going to continue to work that day. Yeah. That's stop. But it's hard to stop, right? We know.
Well, that is. I mean, we talked about that earlier, right? Yeah. The days where I have a red day are always the days that I trade more. Yep. Like today, I'm up $3,000, and I'm like, maybe I just stop trading. Yeah,
exactly.
Maybe I just stop for the day. But the day that I'm down 3,000, I'm like, fuck this, boys. I'm going hard. I'm sizing up. I'm taking trades that I normally don't take. You know, I'm forcing trades. I'm fighting the trend.
Yeah.
So I think that's also like the important thing, right? You got to be focused on like what the trend is doing. It's like right now the market is pushing up. It's trying to push through the 5-minute range. Does that mean that I want to get short because I think it's going to pull back? I mean, I think I would like to see a pullback, but I can't just get short because why? You know, we talked about that yesterday. Like markets
100%.
at all-time highs, and it's like everybody wants to get short, but like why?
I think the trickiest thing is you're 100% on this is your time frame and not mixing it up, right? Because the point there, you're saying, right, you think it's going to go down, but the momentum's up, right? So psychologically, you want to buy it, but you think it's going to go down. So then you second guess yourself, say, well, it's going to go down. Why not I short it, right? So now you're thinking 1 minute down, 5 minutes up. So then what do? You know, and then all of a sudden you can be short and it's breaking high and you're like, I want it to be long anyway, right? You know, that's I think trying to stick to your time frame on very short-term day trade scalp trading is the most difficult thing for a trader. And I think, you know, that's, you know, it's fixing yourself, sticking to the candle that you are on and that you know can benefit you, as opposed to you're not going to call every single move in the market. You can't get every single turn in the market. So stay with the time frame you're on. I think it's one of the hardest things to do as a trader.
Well, it's also like, okay, so here's a perfect example, right? We had the 5-minute range, or we had the 5-minute setup, the bull flag. We took a trade. We made money to the upside. So now what do?
Yeah.
Right now we're up here at this 880 level, and it's like, do I get long again? Or do I have to basically wait for my next setup?
Yeah.
And that's the difference between having a green day and a red day. Because now it's like, well, I could, you know, try to get long here and see if it goes higher.
Yeah.
I got FOMO, right? It went higher than where I took profit at. But now it's just like focusing on that bigger time frame and being like, okay, 5-minute chart, I need to get a better pullback, get a better setup, and then I enter my trade.
It's that patience. That's what I was trying to say. Is, you know, sitting on your hands.
You don't make money fast. But you lose it fast.
Yeah.
I think you know when I hear you talk, you know what I think. You know, you're wrestling with the classic thing that a trader wrestles with, and that is, you know, this kind of FOMO. What should I do? Blah blah blah. Do I get in? Do I get pulled in and out of that? You know, that what's happening in the market, as opposed to waiting for something to present itself to you, and you start to feel, oh, that looks good. Now, oh, okay, there's something here.
Yeah.
You know,
I always laugh when I'll be like, okay, so you know, sometimes you could basically talk yourself through like what the market should do here, right? You're like, okay, we've got this 5-minute candle. We should maybe pull back, test the 800s again, build out a flag, and then go higher. Right. And it's funny because when you actually talk yourself through it and like slow down. I tell people like you almost want to like paint the picture. Right. Like if we're gonna get a bull flag here, what do we need to see happen? We want to see a little pullback, a little wicks. We want to see wicks on the bottom, and it's almost like I'm painting that picture of what this bull flag should look like. If it don't look like that, well then. that might not be the trade, right? Because if it's like, well, I don't look very good. Because, you know, ideally, like a bull flag should look like a bull flag, or a bear flag should look like a bear flag. And it's like those days where you're like, what is this? You're like, well, if you don't know what it is, then you might not want to trade it.
Yeah.
So that, I think that's the best thing for me, momentum-wise, is just to be like, at a certain point, like, okay, I tell people, like, you made money on that first big move, so now we wait for something, like you said, to kind of bring us back into the market here. And it's also the question of like, well, if I took profit already on this long from open, did I take profit just because, like, you know, I saw the P&L being green? Did I take profit because I thought that was going to be resistance? So it's like, that's also sometimes the question.
So what went through your mind when you were exiting?
Just that I was green.
I'm
terrible at that, really. Because when I'm in a good trade, I'll always take profit early. I'll very rarely do I hold a profit for like a trade, you know, for like my target. Because I'm just like, well, you know, hey, I'll take what I got, 30 points. Because there's those days where, you know, as a mental trader, you get in on a breakout, you get your 20 points, and you're happy, and then it pulls back, and you're like, genius. So I kind of like, I've back tested the NASDAQ enough times to be like, hey, you know, majority of the time when the NASDAQ's breaking out, you're going to get 10, 20, 30 points kind of like on that breakout. But after that, I don't know. It might, you know, that could be the trap. The trap normally is 10, 20 points. You kind of like, the NASDAQ loves to overshoot levels. Because that's what I love about traders. They're like, oh, I'm getting short right here at the 900s. There's no way it's going to break 900. It's going to go to 905 and then it's going to crash. It's like everyone is thinking the same way.
Everyone's thinking the same way, and I think like the other side of key levels, there tends to be a lot of stops, so you'll get a lot of stop hunting.
I love that's what we say, the stop runs. It's like everybody, if you're short here at 870, where's your stop at? Well, your stop's at 900.
Yeah.
Just like people, if you're a retail trader, you're just like, well, I don't want it to go break above that previous high.
Yeah.
So I kind of like those high breakouts because I know that there's going to be like that.
Yeah.
Like kind of that little bit
flushing
of
out,
momentum because we got the stops sitting there.
Yeah.
That are going to obviously be filling orders.
Yep, 100%.
And then you've got now people chasing the breakouts. So.
Yeah.
But again, it's like you really want to wait. I say like the tighter the consolidation, the bigger the breakout.
Right.
Right? If we consolidate for a week straight in the same range, we're like, hey, whichever way this starts breaking and moving, like we're gonna get 1,000 points either direction.
Yeah,
so.
I seem to remember, like from my technical analysis days, Steve, that you would mark a breakout based on 50% of the length of the consolidation. Would that be right?
Yeah, to an extent. Yeah, you can say that. Yeah, and where you would.
So like,
well, see, we play 50% of the range sometimes is like support.
Right.
Or resistance.
Yeah.
So let's say you're in a range and then we pull back 50% and now we start consolidating there. I'm like, well, that's probably support.
Yeah.
And the same thing is like if we break a range to the downside, sometimes you get that pushback up to the middle of the range and then the move
and then it
lower.
goes. Yeah.
Typically, the market on a Marabuzzo kind of breakout impulsive candle, it retraces 50% of that candle, but then obviously it's picking the time frame on that candle. I mean, for me, I think this goes back, to when you booked early, right? And there's a bit of FOMO in there, and that's for me around. I had to pivot my trading style away from what you're doing right now, what a lot of our traders do.
You're like, I had to stop doing what you're doing.
Well, no. I couldn't trade like that. I realized, my personality. I think that people get pulled into thinking they need to scalp, need to be in and out fast, because that's where they see. They feel like they're participating more. And for me, it's about finding your time frame. I think it all goes back to that. And that's where it sits. Some people are super good at scalping because it suits their time frame and suits their personality. For me, having to be in and out really quickly put a lot of emotional pressure on. Now, I'm a recovered alcoholic, so I'm an addict. And so that put a lot of emotional pressure onto me to continue to trade, book, go again. And ultimately that ends up with me making a lot and blowing a lot. Okay. So I had to then revisit my trading style, which was actually the same strategy on a longer time frame. So typically now what I'm doing, I'm like swing trading. So I'm in for multiple days, maybe 2-3 days on a trade, maybe into a week or so. Because that for me takes the emotion out of it. But for some people that's harder. They can't swing trade.
No, I hate swing
because they don't have the patience. For me, I think it takes more patience to do what you're doing, right? But for you, you think I've got the more patience, right? But that's because the personality, the type is different. So I don't think people think about that a lot, that their personality type really has to suit their trading strategy and their time frame.
I like it. Right now, we are bull flagging here at the top of this range. I would say, 900. You got the gap fill to the downside. Obviously, we closed Friday there at the 25,930 area. We had news over the weekend with Jerome Powell. Supposedly, Trump is going to bring criminal investigation or the U.S. attorneys. Who the fuck knows what's going on? But I think that was kind of the sell-off, right? Overnight. Kind of the market does not like uncertainty.
No.
Right? And that's what people don't understand is like, when the market's certain, that's when we have like less volatility.
Yeah.
When the market is like, oh, we don't really know, right, what's going to happen.
Yeah.
And like even this morning, like we're going straight back up here, and is it because people are like, well, I guess the news it doesn't really matter.
Yeah, it could be a nothing burger.
Well, because it's like, what's it really matter for the market? Because Powell's out anyway. Like everyone knows Powell's going to get out, so it's just like he has no like when it's all the criminal investigation or whatever they're doing. It's who knows how long that would. Take or how long that would even go on.
Yeah, he's gone in the summer anyway, right?
So he's gone anyway. I kind of laughed. I'm like, why would they even bring criminal? I think it's just Trump just sitting there.
Personal, right?
He's fired up, fucking at the White House. Fuck, we gotta get that fucker. He's got 2 months left. I don't care. Do something. Find a way to fuck him. He pissed me off. He didn't do what I say. So I mean, I think that's what all really seems to be. Just more fucking tax money wasted.
Hey, we should have mentioned earlier on, right? So we're currently on 40% sale.
Yeah, 40% sale. It's on the bottom of the screen.
No activation fee. So this is a, this is a plug, right? But that's for TradeDay.
Yeah.
But announcing on the show now. So if you're new to TradeDay,
new TradeDay.
So you've never been with TradeDay before.
Never been.
You sign up. You use the same code. So it's New Year, right, James?
New Year, the code.
New Year. Okay. Then or better still.
PW? Come on now.
So sorry,
code
so PW.
Code PW.
Hey man, sorry. Yeah, so PW, use PW. And if you're new to TradeDay, it'd be 50% off.
Okay.
So another 10% off if you've never been.
And
with
you guys
TradeDay before.
are I would say notorious for not doing sales.
Yeah, I mean we've been on.
Well, you're not on.
We don't
sale
do
every day.
deep discount. We don't
We're
do
not
deep
super
discount.
deep.
You know,
No
that's-
90% off sale.
yeah, you know,
Well, because there's no activation fee.
no activation fee, and there is, you know, potentially day one payouts.
Yeah,
you know,
explain that day one payout. A lot of people are so confused. Guys, by the way, we're just waiting for this to consolidate. Don't freak out. I know the chat's like trade. Right now, what is it doing? It's pulling back. Let this play out. Let it do what it's going to do. Watch the higher time frame. You can see this 5-minute candle now pulling back. We might pull back 25,800s. Who knows? Let's see. We're right here at this pivot point. So, what's the 1 day payout with
the day one
trading?
payout essentially is that the day that you pass the evaluation, as soon as you clear the buffer, you qualify for a payout.
Yeah.
And there's no sort of like consistency rule. There's no minimum trading days. The only requirement is a minimum of $250, right, Steve, on the payout. So it's literally, you know, you potentially, assuming you clear the buffer, can take a $250 plus payout, and then you can take payouts every day. So, you know, that's kind of like how our USP, if you like, is that we have payouts from day one, and we have the ability, or the trader has the ability, to pull buffer funds as well. Obviously, we want to discourage pulling buffer funds, so there's a 50% haircut, but we do understand that some people need that money, and we do have people pull into the buffer. But essentially, get funded, trade on the first day. If you clear the buffer, you'll be eligible for a payout.
Nice. And you have trailing drawdown in those?
So we have a choice of accounts. We have an end of day, an intraday, or a static drawdown.
Okay.
But what's great about our end of day drawdown is when you're funded, it's end of day drawdown in the funded account too.
Okay.
Right, so it doesn't switch
We
up
don't
on
do
you.
the switcheroo on you.
Yeah,
Yeah.
I mean, I think, with I think we all know who we're talking about, but,
Yeah.
People get mad about it. They're like, well, they have, they don't have trailing drawdown in the eval, and then they have it in the funded. I'm like, well, they could have it in both, and it would suck both ways. But I like the fact that you guys, there is no switch there.
Yeah.
Once you're funded, so you're staying with that same rules.
Yeah.
Yeah.
All right. Well, NASDAQ is right here at the pivot points. You ever mess around with pivot points at all?
Yeah, I like pivot points. Yeah.
I think honestly, like if I was gonna get rid of all indicators, I would say that the one thing that I would use would be a pivot point, but it's really not even an indicator. It would be just like the
level,
previous
right?
day price action.
It's a level. It's finding a level.
Yeah.
It's showing you where value is. And for me, I use it to reinforce, right?
Okay.
So if I will overlay that with
Yeah.
whether you're looking for, some kind of 50% pullback, or whether you're looking for, I don't know, like a congestion area, or whatever it might be, trend line, moving average. But I would double up. If you've got the pivot point and it coincides or it's close to another level, that's where I would use them personally. Yeah.
I like it. Yeah. Well, I mean, I think that's always a thing, right? There's got to be like. The more that you can get like multiple indicators overlapping, the better. Obviously, like when the VWAP, and everything's lined up perfectly, I'm like, ooh, buddy.
Yeah.
That looks good. You got the VWAP, you got the fucking opening range, you got whatever you're looking at, all sitting in one area. I'm like, well, I'm all in, like fucking white on rice, baby. I'm in on that thing. So.
Yeah. Clusters. This is what you want. You want clusters of
Yeah.
support or resistance.
There you go.
in the
Look at
same
that.
level. Confirms. Yeah.
The guy from the floor giving us those floor terms: clusters, correlations, the tricks here. So
See, I remember, Steve, we were talking about when we first started sort of putting together some of the education on
there's
the
this
platform.
push. Sorry, 1 second. We're pushing, trying to get this breakout. Watch that 8. I think if we get through the 880s, we go try to fill that gap all the way up there to the 940s. So 940 area is the previous day close. I'm a big believer. I don't know if you guys look at that too, but like the gaps.
Yeah.
It's
I
very
think the gaps
popular,
are just like huge magnets, right? You get a big gap. It's just kind of like look at tonight. Everybody overnight saw the market moving down. They're like, I'm getting short. Well, watch what happens, boys. Like,
Well, I think what's really, this is like, I'm going to, bore the guys with some history, but markets used to close, right? Markets used to close and then reopen, right?
Yeah.
Now we've got 23-hour markets. I think CME are talking about taking the future to 24 hours.
Yeah.
So, but 23-hour markets, but they used to close. So you used to get loads more actual gaps, like real gaps.
Yeah.
Now you've got gaps on the cash market, right?
Yeah.
With the
See,
close.
I
think they're important. I think those
they
cash
are.
market
I
gaps.
still believe that there's like the overnight moves. Like I obviously look at them, but like I want to see the real volume come in.
Yeah,
Right?
yeah,
Like,
100%.
Like people are like, oh yeah, but look, there was a beautiful bull flag overnight. I'm like, yeah. There's that breakout, boys. We're pushing. Let's make some money. It's going up there through the 900s now. See if we get a little push. But yeah, I think that for me, I'm like, I want to see what the actual volume does, because so many times I've seen the market push up overnight, pull back overnight, market open, boom. Totally opposite direction. Well, that's because the fucking volume's coming in. Like people are like, oh man, he had this huge move overnight. I'm like, yeah, but there's no volume. And it's funny because I don't even look at the volume. Like people are like, what, do you look at volume? I'm like, no, I don't look at volume. I truly don't, because for me, I mean the NASDAQ, it's gonna move. Right. Like obviously at nighttime there's less volume. You know, you can look at the bid and the ask. There's more spread. Like I don't want to trade during that. So maybe I guess in one way I'm looking at the volume. You know, I'm not really like, I'm not looking at it, but I'm also not trading when there's low volume.
It's awareness. You're aware with the volume.
I'm aware of the volume. I understand that we need volume, but I'm also not like, oh, I only trade when there's a big volume. Because some traders, they're like, I get people like, oh, I trade MACD, I trade the RSI, I trade this, and I'm like, I don't know. I'm a firm believer that the RSI is just total dog shit. Because I mean, maybe like on a really like long, like a higher time frame, you know, maybe when the market's just insanely overbought. But is that also like, maybe you would think, is that also like an indicator to stay long? Because the market is overbought.
You know what? When you're trading on the time frames we're looking at now, the indicators out the window, right? You know, completely. You know, overbought, oversold on what's going to happen in the next 1 to 5 minutes is kind of irrelevant, because the market could do anything it wants in those 1 to 5 minutes. You know,
using indicators on the 1 minute chart, like sir.
I mean, I think for me it's madness. You know, that you can go as overbought as you want or oversold as you want on a 1 minute chart. There's almost like a reality of how far the market can go, but if something massive happens, you know, in the market, it can go as far as it wants. You know, it can gap 2%.
Well, that's you know, like I said, with the RSI, right? People will be like, oh man, this market's so overbought. And I'm like, yeah, but that's also very bullish, right? Because it's like confirmation that people are still buying. Be like, I've seen the NASDAQ it's been overbought for an entire day. On every time frame. And it just keeps going higher, because you're like, well, but that's what I tell people. I'm like, if you're going to trade RSI, I think the only way to trade RSI would be to basically trade when it switches. Like when it goes from overbought to now starting to move back down to like, go this way. There's the cross line. Would be like the only kind of like idea for me. But again, it's like you said.
I always found like RSI very difficult indicator to trade, you know, because it looks great, you know, in hindsight.
You can pick the top and the bottom every time in hindsight.
But when the reality is, you know, when you start planning those trades around in those overbought and oversold areas, you know, it continues.
Well, you're right. I mean, you're right. It's supposed to be used when it comes back out. You know, that's Wells Wilder, right? That's what
you don't short just because it's overbought.
No, but what you do is when it starts coming back down, it doesn't necessarily mean sell though as well. What it means is don't buy. There's a difference between sell and don't buy, you know, kind of stuff. They're not the same thing. Where most people see, well, that's a sell indicator. No, it is. It's what it is a don't buy indicator, because it's still pointing up. Just don't buy it now.
All right, so quick little recap here. This morning so far, we had a beautiful breakout there. You had the 5 minute chart. Just kind of, I always say too, what's funny is like when I look at the chart, when I see something very like, just kind of like slowly dripping down. Like to me, that's not bearish, right? It's kind of just like controlled selling. You know, it's like it's not really going anywhere. It's just like, we are moving lower, but I'm also like, I look at it as like, if I'm along, like I'm buying these little dips here because I'm like, ooh, we're about to pop. So that I try to like think about the mindset there of like, you know, if I always say like, if I'm trying to short, do I want to short at the bottom, or do I want to short at the top? If I want to get long, do I want to buy at the bottom or the top? So it's like, so I look at it like, are the big shorts going to be piling in at open at 720s? You know, so like, or are they going to wait for a trap?
I think one thing that, you know, I used to spend a lot of time when I was actively focused day trading doing was trying to think about what everyone else is doing in the market.
It's like a chess game.
You know, exactly. And when it's drifting lower like this, it's giving a lot of people an opportunity to get short. Right? So the shorts are building. Which means that should it turn, the risk reward here is that should it turn, it might pop quickly
Yeah.
because all these people will be caught short and scrambling, and it will exasperate the move up. Whereas if you go short, so if you're short with them, you're going to get caught. Now, if you go long and you're right, you're going to get a reward very quickly because
Yeah.
it pops as these people
Exactly.
scramble to cover. But if you get it wrong, it still doesn't sell off hard because it's already short as a market.
Exactly,
and
yeah.
now these people are starting to profit take. So you get sort of a controlled, well risk managed trade that way.
Versus trying to, I'd say, pick the top. Like this morning, if you would have just shorted the first candle that pops up, and now it's it's ripping.
Yeah.
I like that. That's a good example because what I'd say that's just like that's a bull flag, right? Because you get that controlled kind of selling back down,
100%.
shorts are piling in.
Yeah.
The first candle to start kind of pushing back up, shorts are like, if I shorted at the top here, do I want to hold through this, possible breakout to the upside? No, because you can look at the trades this morning. Same thing at open, right? We go straight up. The shorts start to like get in here. People are shorting. They're like, okay, that's the top of the range. We're going to pull back. And then bam, once you broke out, you get a 40-point candle.
Yeah.
Whereas the sell candles were only, some of these candles were only 10 points.
Yeah.
So that's just like, it gets tight, and then you're getting that move. So, no, I love it. I think that if you can find those setups, if you can find those opportunities where people are getting trapped, like you're just going to get a way better risk reward.
Yeah.
Same thing with like the longs.
Yeah.
Because if it's just getting, it's going to the moon on those longs, you're like, at a certain point they're gonna get liquidated. But I always say like if I'm gonna get short, I want to wait for the chart to tell me that there's a higher low, or a lower high, like on the 5-minute chart for a short. Like I get a lot of people, they're like, oh, I want to get short just because we're at resistance. I'm like, well, why not like wait for the pullback and then see if we put in a higher low below that resistance again. If you break a range, what's the best trade? Well, the retest, obviously. Because then you're like, we get the retest, you see that clearly the bottom of that range is now resistance. So it's like I'm good to get in, and then my risk is good. And like me and D Money, we always go back and forth, as well on like, if I look at this trade here now, okay, I'm getting long at the 900s, like where's my stop at? Well, my stop, if I put it right below the previous candle low or whatever it is, it's like, so like right now, if I put my stop at 890s, like I know that if this pulls back, it'll probably swipe the 890s and then just keep going higher. Right. So like I want to put my stop at a place that I know is going to invalidate my trade.
100%.
Right. Where like a lot of traders, they put their stop they're like, oh, I only risk 10 points.
Oh, you're so right. It drives me absolutely nuts. I've mentored a lot of people over the years. Oh, it drives me so nuts.
I go for 10-point profit, 10-point stop.
Oh, I know. It's just like, the stop has to be when you're wrong, not when that's your pain threshold.
It's not where it's going to bounce at.
Yeah, I mean...
that's always the traders who be like, oh, man, I put my stop, and then when I got stopped out, the market bounced back up. And I'm like, well...
If I'm out when I'm wrong for my analysis,
you want to know you're
done.
Wrong.
I know I'm done, and that's my system, right? But if I'm getting out because I do 10 points, and that's the pain, and then it goes in my direction, or if you catch it and you're lucky, and it goes your way, the worst trade is, as you know, is the winning trade, that should have been a loser. I mean, that is the worst one because it's reinforcing bad strategy. That's the worst trade you can have, and I see so many people doing it. Oh man, how much are you up today?
2,700 across the live account. So
and then
like 7,000.
Couple of trades.
And 2 trades.
2 trades.
2
nice.
flags, baby.
Nice.
See, the best thing is like I should walk away right now. Ideally, right? Because I know what do I see. I think like I like that you guys are here too, because it's like you're also experienced in the sense that like what it takes to like find some type of edge. Where like when some traders come here, they've traded for a year. And like, I learned this in a year. I'm like, well, I mean, because the more that you trade, the more you start to second guess things, the more that you start to like analyze everything. Like we talked about it yesterday, right? Like you get new traders that come in, they have a system, and they're like, that's my system. And then when it doesn't work, what do? The first thing they do is they change their system. Because they got an eval, they got it funded, they blew up the funded account day one because the setup wasn't there or whatever it is. So now they're going to look for a new system. After 3 months of trading, they're looking for a new system. And I always laugh because if you go back and you watch my YouTube videos in 2017, I was doing exactly the same thing that I'm doing now. Right? The same exact thing. I had no idea what I was doing, but I was doing it, right? I was jumping in, bull flags, bear flags. And then it was weird because by like 2020, 2021, I changed up my style. Right? And then guess what? Now, 2025, I'm back at the beginning.
Yeah.
So I spent 4 years on a YouTube. I don't know what to call it.
A rabbit hole. A technical analysis rabbit hole.
Going the opposite direction from going where I should have went.
Yeah.
Because again, I think it gives a lot of merit to what you said, James, on the fact that like if you're going to actually mentor and bring a trader up into the big leagues, you're going to put them into an account and be like, hey, you got 6 months to like basically follow these rules and trade and show me some type of consistency.
Yeah.
The last thing that you want to see is that brand new trader day one make $5,000.
That's the worst thing that can happen.
Like, oh God.
It's the worst thing that can happen to them.
Just go ahead and just take that payout because you're gonna blow it next day.
Yeah.
I do that all the time. I mean, I run up a big balance and I'm like, okay.
So here's a question for you then. So are you going to continue trading? Having said what you just said, you're up 2 trades, decent profit. Is there a pressure because of the job you do as well, right?
Yeah, I mean, nobody cares if I make $7,000 a day.
Yeah, but if you turn around now and say to the audience, these guys now, and you say to them, oh, guys, I'm done for the day. I'm going to chat to these guys and
they'll be mad. They'll all be mad. They're going to quit. They're going to leave.
Bore the shit out of
they're going to fuck these fucking English guys.
They don't shut up.
They don't shut up. Talking about the old days.
These 2 guys talking about the good old days,
Yeah, but that's what's so frustrating, right? At the end of the day, I mean, I'm not trying to like toot your guys' fucking horns, but it's like, if anybody in this fucking industry knows what a trader needs, like you two could sit down with any trader and be like, hey, this is what I think you should really do if you want to find success. And it's not because you know everything. It's not because you're fucking geniuses. It's just that you've been through it all. Right? You've seen the best traders blow up millions of dollars. You've seen the best traders find success. And then you've also seen people who just keep running into the wall over and over, and you want to help them so badly, but you can't because they won't listen to you no matter what. James can be like, listen, just buy an account and trade 1 micro for the next 6 months. Try to make $50 a day.
Yeah.
And they're gonna look at James and go, what the fuck?
Yeah, get out of
here. What am I do with that?
I'm not interested.
I can't make money making 1 micro a day.
Yeah.
I'm like, but what happens if you trade for 6 months and you never get a payout anyway?
Yeah.
So that's like the real question, right? The real question is, you're not going to make money either way. So if you just get rid of the idea that you're going to make money and you change your whole entire thought process to like, hey, what if I go 6 months without losing money?
Yeah.
I'm going to be you're going to be, I guarantee you, the trader who goes 6 months without losing any money and just consistently just like, $20 here, $20 loss, $20 here.
Yeah.
And after 6 months walks away with $500 total profit.
Yeah.
I guarantee that trader is going to be 100 times better off than the guy who tried to go for $10,000 payouts for 6 months.
100%. That person's got 6 months of experience where they haven't blown an account and lost money.
They're learning.
They're learning. They're mentally they're stronger.
When you're
and things
stressed
like that.
out over losing money or blowing up your eval or whatever your issues are, like you're not learning.
Yeah.
Right? Once you go on tilt, you're no longer learning.
No.
Traders are not in a learning phase when they're going all
It's a
in
revenge
on
phase, you're just angry at yourself, angry at the market. Like, I think Steve raised a really good point there, because I was thinking about this last night and about what you do, Patrick, and I was thinking, God, I think I found it the most difficult when I had people watching me trade, sitting next to me, actually watching me trade.
People sitting on my shoulder, I can't do it.
Because it changes the way you think, right? You're less likely to book a loss, right? It changes the way that for me, certainly, it changed the way I thought. And it was a really interesting question that Steve had there, you're obviously walking a fine line between trying to make money and trying to sort of create content, right? We have get views and I don't know what the commitment is, on a daily basis. But I was like, oh my God, it must be so difficult to sit there and, almost trade when you don't want to trade half the time, and that's going to cause you all sorts of problems. Have the pressure of being in trades and not doing what you want to do because maybe you've got something to prove, or it just influences your psychology. And I'm like, I don't think I could trade the way you trade at all.
Well, I think I would probably maybe go back to like trading in the pits way back in the day. Like, let's say there's a trader in the pits who just like, he's always a big size trader. He's always fucking, on the right side of the market.
Yeah.
And everyone looks to that trader as like, oh, he knows what, So I imagine, like, even back then, if I was a bigger trader in the pit, like, there would be those days where I kind of like, don't worry, boys. James, I'm down right now, but I'm going to
your ego gets in the way, right?
Yeah,
and it's going to
prove
the
to
way
James
you trade.
that I know what I'm doing.
Yeah, absolutely.
I mean, there's a great story about that, again, boring these guys, but, it is a good story. So there was this huge trader in the pit. I don't know if we should name drop.
Fine, I think it's fine now. We're past. It's 25 years ago, so we're past the statute of limitations.
25 years.
So David Kite, right?
Yeah.
David Kite was known as a really, really successful good trader.
Yeah, he
And
went on to
used
form
trade-
kite broking and kite
Yeah,
futures.
and he used to trade in the Bund pit, which is the equivalent, the German bond market,
Yeah.
equivalent of the Treasury bonds.
Yeah.
And he walked down into the UK one day, walked into the UK a gilt pit, which is the UK bond market. So he walks in there, right? And everyone's like, "Oh, what's David Kite doing in the pit?" And it's really near the end of the day.
Yeah, yeah.
And he just whispers to one of like the guys who works for one of the big banks, you know. So and basically what he asked him was, "Which way are the locals? The locals are the day traders,
Yeah.
right? Which way are the locals?" And the guy said they're all short, right? So at the end of the day, and he just went, offers, and he went buy.
Oh,
He
no.
bought everything,
Yeah.
squeezed out, took out all the locals, all like his fellow, you know, these are the fellow traders,
Yeah.
knew what they were all short, squeezed them all out, and absolutely made a killing in about 10-15 minutes, right? And just walked out the pit and went like this, went, "Thank you very much," and just walked out like that. And it's unbelievable, and that's both the power of personality, right?
Yeah.
But then also knowing which way the market is, right? And just taking advantage
Well,
of that
we
piece
were
of
kind of
information.
laughing about that earlier too, right? You know, back in the day, not to keep saying back in the day, but like, you know,
I think we should call this morning's podcast or live stream.
Yeah.
Sorry, back in the day.
back in the day.
Back in the
Which
day.
is, I think a perfect example, right, is the traders who had success in the pits. You know, they might not have been the smartest person.
Right.
Oh,
They might
100%.
not have been the analytical person.
No, they weren't book smart.
Yeah.
No, they weren't book smart.
So
Yeah.
that's funny because now you can have somebody who's super analytical, who's super smart, that can really kill it, you know, on a screen.
Yeah.
But in the pit, they would have got destroyed.
Yeah.
So I think that's kind of funny because, you know, when you watch movies of traders back in the day, trading places, you know,
Yeah.
stuff like that, you see these, you know, very, you know, big personality people in the pits, and
Yeah.
those personalities, like, I think trading in the screen would absolutely destroy them, right?
Well,
Because like you
yeah.
can't sit
Yeah.
here and be like, "Oh, I'm on the bid."
Yeah.
No one's listening. You know, I'm
Yeah.
buying the bid. and no
Yeah,
one's
yeah, no.
listening, you know?
Listen, it was a very interesting time when the floor closed, and we had to transition from floor traders to office traders, and everybody that tried it didn't succeed. You know, in fact, it was only
Yeah.
a small proportion of people. I was lucky enough to be one of those, but it took me a year to change from the way I traded on the floor and undo certain habits and the way I looked at the market and relearn sort of screen trading.
Yeah.
And I pretty much lost money consistently throughout that year, certainly for the first 8 months, and it started to sort of like bottom and then turn the corner. And some of the big traders, you know, they built up small fortunes on the floor. They lost it, didn't they? They lost it
Yeah.
in the sort of
It's-
first
I
and second year. Because
I've heard the same thing
Yeah.
for the Chicago pit traders.
Yeah.
I mean, I don't hear of any like Chicago pit traders who are absolutely killing it on the screens now.
yeah,
No.
yeah,
Because I think it's like you said, it's a totally different market.
Yeah.
It's a totally different world.
yeah.
a lot of them
Right?
are probably dead as well.
Yeah, you know, I mean,
Lots of
look,
drugs and
you know,
alcohol.
drugs and alcohol, and I think actually even with age, you know, your attitude towards risk changes. You know, when you're in your 20s and 30s, you know, you don't particularly, you might
don't
have a
have a mortgage,
family,
you
you
don't
don't
have
have
a
children,
family,
you
yeah.
don't have financial obligations. You can trade more freely, but when you know, you move into sort of like your 40s and 50s, like Steve and I are in our 50s, you know, there are more responsibilities, and it changes your attitude towards
Yeah.
risk, and that impacts the way you trade. Doesn't mean you can't trade.
Yeah.
You just trade differently, you know.
Well, I think that it's funny because not that I'm 40 now, but I'm 37, and
Tick,
you know,
tick, tick.
getting close.
Yeah, it's getting
But you
close.
know, now I feel this immense responsibility, and I don't think people will believe me, but I feel this responsibility for my employees.
Yeah.
Yeah.
Right? Because at the end of the day, it's like
100%, yeah.
if I lose all my money and if I
Yeah.
fucking go off the rails, then it's like, you know, I got 10 people who
Yeah.
rely on me to make their paychecks.
Yeah.
And they have families. They have their own dreams or aspirations. And
Yeah.
it's like, it's a lot of pressure on myself now.
Yeah.
Because before I was just trading being a fucking crazy YouTuber.
Yeah.
Yeah.
And now it's kind of like, fuck, you know. If,
Yeah.
So you're not a crazy YouTuber anymore.
Well, yeah. Well, it's funny because on the boat yesterday, you guys were like, you're just like the person on the internet. I'm like, no. I mean, there's obviously, you know, there's part of the show. I think people don't know that I'm as smart as I am because I kind of play this, you know, just crazy, rambunctious
Yeah.
character because
word.
people, it gets the views, but
Yeah.
it's all there's a method to the madness, 100%.
Yeah.
You know,
Yeah.
everything I do is very calculated, knowing kind of like what I'm doing and how I'm going to
Yeah.
portray it myself. and
Yeah.
put
I mean,
it
I
out
think
there.
when, like the one part of the attraction of trading is obviously the potential for high financial rewards. But I think also a lot of people really like it because it is you and the market, right?
Yeah.
You're not answering to anyone. You don't have responsibility of colleagues or employees. And that has shifted for you, like it's shifted for Steve
Yeah.
and I, with TradeDay. And, I haven't traded full time for myself since 2009. But the responsibility that you have to your staff changes the way that
Yeah.
your
I mean,
attitude to risk and the way you approach the
and
market.
you've got at the end of the day you've got paying customers.
Yeah.
Right. So it's like if shit hits the fan and you've got to pay out people and you're gonna have to do retroactive changes or come up with some scam to basically deny all these payouts, like that's like you got to go to bed at night
Yeah,
knowing that. And it's like
Yeah.
I'm sure that after talking to you guys and meeting you that like that's not what you want to do.
no,
You don't want to have to deny traders payouts because you sold the accounts too cheap.
yeah,
So I think that's a huge thing because you've got thousands of traders. And like we said the other day, like sometimes somebody getting a $500 payout who lives in a country, who knows where,
Yeah.
like that's life changing for somebody.
Oh, huge.
Hey,
Yeah.
I made my whole entire monthly salary from work.
Yeah.
Trading a trade day for one
Yeah.
day of trading, and that's
Yeah.
like, it's life changing.
Yeah.
So I think that's responsibility, right? Because again, it's like when you're young, you're a man, you're like, what do you got?
yeah.
You're like, fuck it. If I lose everything, I'll go live in the woods.
Yeah.
Now
Yeah.
it's like, well, I can't do that no more.
No, I mean, it's you touch on something very important to us, and that's the sustainability for TradeDay, both to our staff, our own personal financial futures, but also to our customers.
Yeah.
And we are seeing, we've seen since day one firms come and go, blow up, the most sort of like, I think,
It's
high
funny-
profile.
It's funny because I think there's probably a correlation between how traders come in guns a blazing and
Yeah.
they think they're the best, they're gonna
Yeah.
make much money, and in the beginning they do,
Yeah.
and then all of a sudden they disappear. And
Yeah.
where'd they go? Like, oh, they
Yeah.
lost everything.
Yeah.
And that's kind of the
Yeah.
same thing for some of these small prop firms, right?
Yeah.
They come in day one, they're like, oh, we don't have any rules. Our
Yeah.
prices are the cheapest. Oh,
Yeah.
we pay out everybody. And
Yeah.
it's like, good luck with that.
Yeah, yeah. Let's see what
it's like,
happens.
see what happens.
Yeah.
Call me in 6 months.
Yeah, I think you have like two subsets. You have the people who get it wrong, right? That balance, and they get it wrong like fast track trading.
Yeah.
And when they went live, I was like looking at their program, going, "How are they doing that?" They're going to have a
that's the
payout
funny part is you're
obligation.
wondering how.
Yeah,
Like, well,
they're going to have a payout obligation
now we know.
building.
Yeah, now you know what
and
they
of
were
course,
doing.
it played out as we thought it would play out within about sort of 3 months. And then you have other firms. That come in and get it wrong, but they survive for the short term because the markets are conducive with traders failing, and then they move into this period we talked about earlier. As a professional trader, sort of 70% of my year would come in, 70% of my P&L will come in 30% of my year, or 80-20. And the markets move in and out of phases where they're more conducive to generating P&L for the trader. And I think, what's happened in the last few months, we've seen a bit of that. And we've seen payout obligations grow at prop firms. And we've seen some prop firms not be able to cope with that and start retroactively fitting rules and pulling the rug under traders. I think there are a lot of prop firms out there that are just right on the line at the moment. And if the markets continue to move in the traders' favour, we might see them fail. And, and we've spent a lot of time building our risk management and understanding the market risks and the tail risks that come with selling an evaluation to somebody, that ultimately you take up some upfront revenue, and at some point they might find themselves in a payout situation and they'll be taking money from you in a funded SIM account before they move to funded live, obviously. And getting that balance right, and that has not meant being the cheapest and the easiest to get funded, and that's so, we have to live in that world where these new competitors come in, there's low barriers to entry, they can start these firms quickly, and the next thing they're blowing up and they're tarnishing the industry reputation.
Well, it just sucks because now like I said, the same customers that are like, oh man, trade day is too expensive, it takes too long, but then it's like they go and spend money somewhere else, and then they get their payouts denied. It's like, well, I guess you didn't get your payout faster, did you?
No.
If you went to so-and-so company because they have 1 day pass and they have instant payouts, and then you go to get a payout and you're like, you got denied. You're like, so I just wasted 2 weeks of my life at this shithole company, whereas like if you would have just traded with TradeDay.
Yeah. I mean,
so it's like, that's the funny thing. It's like everyone wants that shiny object.
Yeah.
And then you get there and you find out, you're like, wait, that's
Yeah.
not real. And
No.
it's a Fugazi.
Yeah.
NASDAQ starting to push out here through the 15-minute range again, boys. Got to get through this 900 area strong. We are right there trying to go. I think we can easily get up there 940s or so. That high so far, 923s. She wants to go. You can see there on the 5-minute chart, putting in that higher low. So, I mean, we're getting that confirmation, higher low. It ain't beautiful. I do want to stress that the ES is kind of like right in the same spot. So, NVIDIA's flat right now at 185. It's crazy how, like, I mean, you could basically just look at the NVIDIA chart and then just like
yeah,
NASDAQ.
I know. Well, it's amazing what percentage of the index funds are made up of like just a handful of companies now.
Well, it's scary. It's scary, but it's also like just funny because people are like, "Oh, what do you trade?" I'm like, basically trading the NASDAQ. I'm trading NVIDIA.
Yeah, you are. Yeah. I think
like if NVIDIA's crashing, there ain't no way NASDAQ's going up. Zero chance.
If you want to add another, not you personally, but viewers want to, add another level to your sort of like analysis. And it's not difficult. It's to have overlays of like, the Magnificent Seven, just on the side chart, and just looking if they're breaking out, if they're setting up to break out, you know what, it might make you still want to get the confirmation out of NQ or ES, right? Yeah. But what you might be, you're priming yourself to maybe go in a little earlier if you're getting the setup on, whatever it might be, Nvidia, Tesla, Amazon, whatever it might be, because you're looking for confirmation elsewhere. I mean, I think it's a great little add-on. Now, some people don't like that. They don't want to be very short term, focus just on one asset class. But, effectively, ES, and even more so the NASDAQ, is, as you say, those 7 stocks, sort of thing.
I hate saying it, but it's the correlations, right?
Oh,
it's like, here's the thing, right? Like, if the Mag 7, everything's looking bullish as fuck, what am I going to do? Like, I'm short of the NASDAQ. Like, don't do that. Like, what do you mean? Well, it might not be a good idea.
I think the market's a bit like a cobweb, right? You pull one corner and like everything pulls with it, and you got to figure out, what that corner is on one given day and things like that, or what that is for your asset class, right? And I think, like Steve says, like tracking the Mag 7, and if that's too much,
particularly
the top ones in the Mag 7, and finding out that can give you that correlation, that sort of leading. That just thinking a few seconds or a few minutes before getting ready for your setup, start looking in your NQ for confirmation of what's happening in your Mag 7. That could really help and enhance your trading.
Yeah, I mean, I think for me, I just look at it like, hey, if NVIDIA's going straight up, I ain't trying to short on the NASDAQ, and vice versa. Sometimes, like, if NVIDIA, let's say, like right now, it's just going sideways at 185s. Now I'm like, well, I don't really expect a big move in the NASDAQ here until NVIDIA starts moving. Right? Because I think everything's just like, even companies outside the Mag 7, like, if the Mag 7 are red, it's just hard for anything to get momentum. Right? Like, it's very, very, very seldomly do we see the Mag 7, flat and the rest of the market going to the moon.
Right.
Because it's like you kind of want the Mag 7 to lead. And then, I don't know about you guys, but like I keep an eye on the ES, I keep an eye on the Dow. I would say the ES is more weighted for me in the sense that, like, if the ES is crashing, I'm not getting long on the NASDAQ.
I mean, when I traded, I would really focus on one product. And for me, that was a lot of what we called Euribor, which is the European interest rate curve. But I would have the short sterling curve, short sterling, which was the UK interest rate curve, and the euro dollar, not the currency pair, but the actual US interest rate curve up. Right? And it's the same if you're trading equity indexes, you should have other equity indexes up. If you're trading bonds, you should have other bond markets up. Because there are correlations, there are leads, you start to figure out how all this sort of fits in, and and it might be that you're trading, for example, NQ, and it's stronger than the ES, but the ES is pulling back, coming off, and it's dragging the NQ with it. And you're looking for that sort of turning the ES for the NQ to sort of motor away because it's stronger, right? So it's really interesting, and I think really important that you're looking at the correlations or the correlated markets to the product you're trading.
I think, like, right now ES is basically bull flagging right below 7,000, and then you've got the NQ sitting right here trying to break out. So I'm like, hey, if the ES starts pushing through 7,000, I think Nasdaq's going to go.
Yeah.
And like Steve said, you kind of sometimes you can get in on those trades earlier because you're like, well, here go. The ES broke the high first.
Yeah.
Like the chance of the Nasdaq not testing the high now would be very low.
Yeah,
so,
agreed.
Yeah.
And
And also, like, I'm not going to get long on the Nasdaq while if the ES is crashing. Right now, like if ES starts pulling back more. The other day the ES was actually crashing, and the Dow was crashing, but the Nasdaq was flat. And I told everybody, I'm like, hey, if the ES starts to find a bid here, even though it's still crashing, like once it finds a bid and starts pushing back up, expect the Nasdaq to maybe start going higher at that point. And that's exactly what happened. It was like red. Finally, we started getting a bid. ES starts coming back up, and then Nasdaq started going. So I'm like, because everybody was like, look at the ES, it's crashing. I'm like, yeah, but Nasdaq's just holding right now. I want to see something happen here. Because I think you made a good point with like the different markets. It's not so much that you're like, oh, I want to figure out what the ES is going to do first, so then I do with the Nasdaq. It's like if all three markets are moving in the same direction, then you're like, oh, that's what I want to see.
Exactly.
Right.
Well, that,
unless you're doing some inverse trade where you're like looking at the the VIX or whatever because you want the VIX crashing while the market going up, something like that.
Well, 100%. I mean, that goes all the way back again, right? I mean, this is like super back in the day.
Yeah.
So this goes back to Dow theory. Dow theory that comes from the 1800s.
Yeah.
I'm not talking.
Wait, I thought ICT made the market. This is 1800s, sir. What are you talking about?
Well, he went back in his time machine, right?
I'm basically saying that ICT didn't make the market.
Yeah.
I'm confused.
Yeah, but Dow said that. The indices had to confirm each other. Back then, it was just the Dow Jones Industrials and the Dow Jones Utilities. Transportation. And they had to confirm each other. If one made a new high, it was only relevant if the next one made the new high. And but that translates today into ESNQ, Dow, Russell even, And it's interesting you say there. I think the other thing is about the leadership. That leadership switches between them
every day,
depending if
one's leading, one's trailing.
Exactly, and you need to kind of get a little sense of that as well. And that can come from the news. So putting out a bit of macro overlay is then whether we're going into earnings season. All of a sudden, as we go into earnings season, like really kicking off tomorrow, what's going to become really important again is that Magnificent Seven leadership.
They're fucking
and then
earnings.
You need to watch those days when those Magnificent Seven are reporting.
I'm continually amazed at the amount that the fundamentals are ignored largely by the retail community, and I've seen many career wasted by people looking for answers in charts, and that's just like one. Technical analysis is important, but it's just one piece of the jigsaw. You have to understand risk management. You have to understand your own psychology, the psychology of the markets, and I think you always have to understand what's happening fundamentally. Like as you said, the reporting season's coming out, and it's it's going to impact price. It's as simple 100%. As that. Your chart might be saying it's going down, but if they have record reported earnings, things going up.
Well, I think it's like. It's just about being aware, right, of like possible outcomes. Like people sometimes I'll be like, hey, if it goes below this level, I think it's going to go down. If it goes above this level, I think it's going to go up. And they're like, well, it's 50-50. I'm like, that's trading, right?
Yeah.
I'm like, if we don't break out here, I think we're going to pull back to the VWAP. And they're like, yo, you're just saying both directions. I'm like, yeah, but as a trader, I want to be aware of like what are the two outcomes.
Yeah, exactly.
Like, and then I'm also like, does it make more sense to pull back? Depending on the time of the day. Right now it's 10:30. It's like, well, maybe at 10:30 would make sense to kind of get a little bit of a reversal. Yeah. And I'm like aware of that. I'm aware of like the times. And then I'm also like aware, for the news cycle, like you said, maybe more on the monetary side. But like people will be like, oh, you're talking about rate changes and stuff. And like sometimes, quote unquote, bad jobs data makes the market go higher.
Yeah.
But like, why? I'm like, well, because that's gonna push Powell to have to cut rates.
Oh yeah. 100%.
You know what I mean? So like, you got to think almost like 3D in the sense that like not all bad news is bad news.
Yeah.
Because I see people are like, oh man, the jobs reports was terrible.
Yeah.
I'm like, no, that's good.
Yeah.
Like, that's gonna make them have to change interest rates.
Yeah. 100%. Yeah. I mean,
so that's all things you got to learn.
There's a subtlety. There's a subtlety to that. You're right, 100%, and that we're seeing that a lot at the moment. What you want is, if you're a bull, what you want is slightly bad data to prompt the Fed to cut. So bad data for the economy equals good for the indices. But super bad data, if it's really bad, that's bad for everything.
Well,
right?
then sometimes it's also if they cut too much.
Yeah.
Well, then that's also scary because now you're like, wait.
Yeah, no,
Now
it's
the market's like, wait,
inflationary.
why are they cutting 50 basis points?
Yeah,
It
yeah.
must be a lot worse than we
Either
think.
they're worried, or again,
Yeah.
then you get the whole thing is that political interference,
Yeah.
which whether you're a Trump fan or not, right? Political interference isn't good, interfering into the financial system. Or let me rephrase that: the market doesn't perceive it as good, right?
No.
So the market hates that. It doesn't want to see political.
Well, because it's like
interference.
it's uncertainty.
Yeah,
Right. If
exactly.
Trump tweets and says, "Hey, I want to do this," the market's like, you get a big move in the market, not
Yeah.
because the market, is oh my god, everyone's panicking. It's just like there's that uncertainty now.
Yeah.
Because if like the Trump tariff thing has been like, that's like we were supposed to get a ruling last week, didn't get a ruling on it. Now they pushed it again.
Yeah.
So, I'm like the market's basically pricing in that they're gonna, revoke the Trump tariffs.
Yeah.
And I think that's why we've gone higher recently, because everyone's like, once that news came out that the fucking Supreme Court was basically gonna look into it, everyone's like, oh,
Yeah.
well, they gotta deny it. So
Yeah.
now that's why I think why the market's back to all-time highs,
Yeah.
because you basically that's 15% just like back onto everyone's books, profit-wise.
Yeah, it's interesting. It's really, what I've been surprised about, I think, in the last sort of 6 months is the level of uncertainty in the market, yet, we're still grinding higher.
Yeah.
And it's just, that surprised me as a trader.
You think that's it's just inflation though, right? Like it's just real inflation happening in front of us.
I mean, it's partly inflation. I think as much as I've got a stack of long-term money in the Magnificent Seven, a stack in Nvidia, a stack in Tesla, right?
I mean, where else are you gonna put it?
Yeah. But exactly, where else are you going to put it? And you're going to ride this wave, but there is.
Like, at what point would you sell Nvidia? If Nvidia went to 500, would you sell? I'm done.
I think again, this comes back to longer-term technical analysis. I'm looking for the turn, right? I'm looking for some kind of confirmation at the moment, right?
So for the next
Why
2
would
years,
you
it just
ever?
keeps grinding higher. You're just like, you're
Why would you?
This
ever,
is not
right?
financial advice.
Yeah, this disclaimer.
Disclaimer,
Right,
yeah.
but-
I'm a prop firm guy. I'm not a financial advisor.
But I mean, you know what? I don't see how you can stop. But there is. I don't think we're there yet. I've lived through a lot of bubbles. I don't think we're at a bubble level. Bubble level is like, when your grandma's coming to you saying, hey, Nvidia, tell me about Nvidia. I had people, when first time Bitcoin hit $20,000, when it hit $20,000, my wife came home, she works at a preschool, and she's saying, oh, some of the ladies at the preschool, some of the mums at the preschool are asking, telling
about
us
Bitcoin.
is it good? Is Bitcoin good? And I went, sold! And I think, and we're not getting that with like the Magnificent Seven. Yeah, I see people coming on the stream. What are they talking about? Mag 7, right? These guys are trading, right? And they don't understand what. So if they don't know yet.
So let's explain it.
I have a lot of retards in my chat. So
I think to be fair, right, it's unfair because. We've been in the market so long. This comes very natural to us, and you run a daily meeting, you're in research and things like that. Why don't you just take a second, Steve, to explain the Mag 7?
Okay, so Magnificent. So I'm
what is the Mag 7, Steve?
So this was monikered by who came up with Magnificent 7?
Jim Cramer, wasn't it?
I think it is Cramer, right? Yeah, I think it was because it was FANG first of all.
Yeah.
First of all, it's FANG, which was Facebook, Amazon. Then they did AA in FANG.
Yeah.
Facebook, Amazon, Apple, Netflix, and
Google,
which is now Alphabet. So the Magnificent Seven now, they sort of remonikered them. So we have got to get this right now, precious.
Basically the 7 top tech companies.
I know, so that's what I'm thinking, right? So we've got definitely those. So we've got those the FANG stocks.
Nvidia.
Maybe Netflix out there actually.
Nvidia.
And then in there you've got also Nvidia and Tesla.
Right.
Yeah. So that's where we are. So that's what we mean by guys, right? So the Tech 7.
I remember.
Stocks.
I still remember. It was
he did FANG right before.
It was
before
FANG. Facebook, Apple, Nvidia, Google.
Yeah.
But I remember, back in the day when when the Nvidia was like $20.
Yeah.
And this was like 2016.
God. Yeah.
And everybody was like, it went to 60, and I was long from like 20 to 60, and everyone was like, it can't go any higher.
Yeah.
It just won't go any higher. There's no value there.
Yeah.
Right? And then it was like, it just kept going higher. And it's like, still today, it's the same exact analyst saying the same exact thing.
Yeah.
And I'm like, you fuckers have been saying the same thing for 10 years now. And that's what people don't get, right?
Yeah.
Is that these analysts, they they have no fucking idea where the market's gonna go. They're just getting paid to put out a write-up.
Yeah.
And they're just looking solely at the financials and going, they made this much money, this is how much they're worth. You're like, well, same thing with like Tesla. Look at Tesla. If you took Elon Musk out of the equation, right? You just
Yeah.
took them out of the equation.
Yeah.
Well, then, yeah, Tesla probably wouldn't be where it's at.
Yeah.
But you have to think about it like from a totally different standpoint, because now you have a stock that is basically just attached to a person,
Yeah.
right? Like
100%.
everybody, Tesla cannot do wrong because Elon Musk.
No.
Yeah.
You know, so
Yeah.
it's just like it's crazy.
I mean, he came out and had all that bad press when he was working with
Yeah.
Trump, right? And Tesla came through all of that,
Yeah.
right? So as much as he's connected to it, people still know there's an underlying.
Well, people invest.
strength
I talked
it.
to Tesla people, and they're like, "Oh, I just believe in Elon.
Yeah.
Elon's gonna be the the future."
Yeah.
So they don't care. They're just like
And
whatever the
you think
price
about
is
him,
now. 10 years.
I mean, he's unhinged in some ways, right? But that's what makes him like a business kind of genius, right?
Oh, yeah,
So-
he's genius.
because he's on
yeah.
spectrum somewhere, right? You know, kind
Oh,
of
he
stuff.
definitely on the spectrum.
Oh, God.
Well, see,
And-
that's what's funny about Trump, right? You made like talking about the genius of business, right? At one point, Trump was bankrupt, right? All the banks were calling and saying, "Hey, we want our money. What the fuck?" And he's like, "Well, how about I just, I'll sell you the rights to my name, and we can put the Trump name on everything." And
Yeah,
they were
yeah.
like, "What the fuck are we gonna do with that?" And they're like, "We're gonna get rich."
Yeah, yeah.
And that's what they did. They just licensed the name to everything.
Yeah.
And they put the Trump name, and that saved it.
Yeah,
right.
yeah.
He made his name valuable to the sense that his properties were worthless. But now if I
Yeah.
put the Trump, the golden Trump logo on the side,
Yeah.
it's worth something.
Yeah.
And that was the genius of Trump, right? Just he basically doubled down on his name, and I might have learned a few things that way because I've always been that way. I'm like, at the end of the day, I will only ever be remembered as what I've done as a person and who I am, and I've always kind of just been Patrick Wieland. Like I never. People like start a YouTube channel like I'm a NQ Trader 557. I'm like no. This is my name. This is my brand. Kind of think it's probably there's the same thing with you guys, right? You put your face on TradeDay. You put your
Yeah.
family's reputation on TradeDay
Yeah.
working, right?
Yeah.
So it's like you have more pride in it. You
Yeah.
have more reason for it to succeed.
Yeah,
Yeah.
I mean, it's a good point. When we were thinking about the brand and thinking about starting the company, we wanted to bring it credibility, and sort of like say, hey, we started in a space where there wasn't a lot of competition either,
Yeah.
right? It was in 2020, the company was registered, we launched in 2021, and we wanted to, I was like, look, I've got 30 years of experience and all this sort of like network and connection through banking and hedge funds and financial industry and exchanges, and I want to bring that to the business, and lend it some sort of credibility, if you like, and some sort of level of trust, and that's why we put our name at the face of the brand initially. Yeah.
I mean, I think that's the only thing to do,
Yeah.
right? Like you got to put your name on it because if
Yeah.
you don't put your name on it, then there's no.
Yeah, you're not
risk
standing
for you.
behind it, are you?
Well, it's just like
yeah.
then you just disappear.
Yeah.
Everyone's like, "Oh, what happened to TradeDay?" I don't know.
Yeah.
I didn't know who ran that company. It's
Yeah.
just like there's no risk.
Yeah.
Same thing with like people on the internet that go and comment with fake names. It's
Yeah.
like, oh,
Yeah,
you're
yeah,
just
yeah.
like, you're a fake name.
Yeah, you're not standing behind it, are you?
What do you? I'm not gonna listen to
Yeah.
you. Like, what am I gonna worry? Hey, some fake guy on the internet said that I suck at trading. I'm like,
Yeah.
whatever.
Yeah.
It is what it is. So yeah, I think you got to put your name on it. You got to stand for something,
Yeah.
right?
Absolutely.
So that's what I love. That's what I love. Right now, the Nasdaq. Look at it. We pushed up there almost to the top of the range. Well, top of the gap fill. That gap fill's at 38. The high of that candle was 33. I took a couple little longs here this morning. Not much to write home about, boys. I mean, the big move of the morning was right at open. We took the longs. If you're watching the stream for long enough, you know that was a long. Look at that bad boy. The best part is it just went straight to the moon. We had that overnight low, kind of almost like an inverse head and shoulders. So that played out. Right now, the Nasdaq pulling back here. I might be done for the day. We got D-Money coming up at 11 o'clock. D-Money at 11 o'clock. Big thank you, obviously, to James coming by here today.
Yeah, you're welcome. It's a pleasure. Thanks, man. Thanks for
Love
having
to
us.
see it. I know. I think you guys wanted to escape the cold weather.
I tell you, when I came out the airport in Florida, I'm like, man, why don't I live down here?
I mean, why don't
I
you? That's the
literally
question,
took
my
off my
friend.
puffer jacket, and
Yeah,
my
I mean, maybe
sweatshirt.
you could build an office right next to Ken Griffin.
Yeah.
He's building like $1 billion office for Citadel,
Yeah.
which is wild.
The icing on the cake was going out on your boat yesterday as well.
Yeah.
I was like, oh my God, I've got to take a photograph of
Uh-oh.
this. Send it to my dad.
Swag? Woo! That's pretty sick. Little BDH trade day. This might. Let me see. I got a real big head.
Big head.
Hey, you know about marketing.
We know. TradeDay. 50% off to new users.
TradeDay, 50% off.
Use PW.
Hey, think about it, guys. The best part is, like, these are the guys you get to talk to. You know, you get to talk to these guys when you have problems. When someone sneaks into your house at night and blows up your account, you can talk to Steve about it.
If you guys want to know more about like the Magnificent Seven and their impact, tune into the
also,
daily morning meetings.
I want to give a shout out to Steve every morning. How do people get access to that? Just for being a customer.
Being a customer, we on the first page of the members area, we have what's called the trading room. We have our live market commentary. Steve.
Oh yeah, tell us about that actually.
Yeah, so there is a service. So I'll just go right back in the day.
Sorry,
back in the day.
Yeah, back in the day.
Banks and hedge funds and large proprietary trading groups would employ an analyst to have a read out breaking news, market rumors, big markets moving to big levels, and they would squawk this throughout the dealing room. You'd probably seen it on movies. You hear it coming over the squawk. And then what happened, I think, during like the 2000s and on, was the proliferation of media. There was so many different channels, and it became a really big task for one or two individuals to do. So services came up whereby they would Live Squawk, I think, has a service of a team of about 25, 30 people scanning international news media, social media channels, looking for breaking news, market rumor, data being released, that type of thing, anything that has the potential to move markets, and they squawk it. And as a bank now or a hedge fund, you can subscribe to that service, right? Rather than employing your own people, you can subscribe to that service. We have a good friend that owns Live Squawk, and he makes that service available to us, and we give it to our traders for free. So it's an audio service. You just hit play, and you can listen
anytime breaking news comes out.
Yeah, exactly. It's a little strange for some people because it's not like TV, and it's not like this where you want to fill dead air time. So it's just quiet, and then something will be like, Trump's just announced on Truth Social XYZ, that sort of thing, and it'll like focus your mind on that part of the market.
I need to get a BDH one set up.
Yeah,
it's got my voice and AI.
There you
Boys, Trump bot. Boys, Trump just tweeted he likes big pussies. Go long, NASDAQ, BDH, baby.
We have those sort of resources in there, and then part of that resource is Steve does a daily morning meeting for about 20 minutes where we just recap the markets overnight. Well, you can give a bit more colour, Steve.
It's just going through what's going on in the markets, really. Recap what's happened, what's coming up.
Just gonna hear your beautiful voice every morning. For free.
Exactly like that. Yeah, I mean, I don't put the face on there. Maybe we should do that.
Get it on there, man. You got a face for radio.
How's it look? I got a big head, like I got a big head.
James looked like a gangster over there. 50 Cent with that hat on.
There you go. My kids will be
happy.
happy.
Gonna bust out a rap real quick.
My kids will be happy, definitely. Yeah.
Do you think? I guess it's funny because some people they get upset because of my language or whatever online, and my they say my just rawness. But I mean, I guess back in the day working on the pits, you guys saw it all.
Oh my God!
There was no fucking holding back, right?
No, there's no holding back.
You get some good fights and stuff back in the day.
There was
fights,
physical.
Yeah. There was one time there was a load of protesters, right?
That's different. That's not trading related, but it's a great story.
Story about fights though.
Yeah.
So there were a load of protesters, and it was kind of. This was back in the 90s. It was what would be today like woke protesting.
Yeah,
that's what it was. They were like it was an environmental protest.
Yeah, I think the G7 was in town or something like that. So the world
in front of the exchange.
But in front of the exchange, and then they
smashing up the streets.
Started to coming into the exchange, and the guys at the banks, you know what they were doing? So all the banks around, they were going to photocopier. Taking some pounds and photocopying them and then cutting them up and then chucking it out the window at these guys.
Yeah, just had to take them, wind them up.
I know. And then they got into the exchange, and there was this huge escalator up the exchange. And I know this for a fact because my boss at the time was on the board of directors at the exchange. And so they're coming up these escalators, and then these guys. And remember, the guys on the trading floor. A lot of these are like very street smart. They're actually literally market traders, as in selling grocery. The market.
Yeah, it's actually. If I just give a little bit of context, because it was actually pretty frightening being on the trading floor. Because we were getting updates. Like they breached the front of the building.
Yes. You're thinking they're coming into the fucking building.
Yeah, and and it was like so. I would say probably I don't know. 1/3, 2/3 of the floor was a lot of runners, a lot of admin, a lot of phone clerks, girls and young people, and they were like we want you to move to the back of the building.
way.
Seriously. So we were triaging like strength.
Yeah.
And then the guys in the pits are like, fuck this. and they went out to the top of the escalators and started, and a full on fight happened at the top of the escalators, and they managed to hold them off until the police got there, and it was like, it was a bloodbath, wasn't it? I mean, it was terrible.
But the director, so the chair of the board, it's like the head of the CME, right? He pulled all these guys afterwards, like a couple of days later after the aftermath,
and they thought they were all going to be like fired and stuff.
They thought they were going to get fined and stuff. And he said, "You'll never hear me say this publicly, but thank you for your service. Thank you for your service, gentlemen."
Yeah, thank you for saving the exchange.
Dismissed. Yeah, that was it. Yeah.
Some guy in the cat said he was at Cots.
Coots. Yeah.
Photocopying 50-pound notes and chucking them out the window.
Yeah. Coots was in the building.
Isn't that crazy? How cool is that? There's literally some guy here in the stream right now watching.
Yeah.
Right? And like, I love because there are people in the chat, some older guys that message me and that they're like, oh, I used to trade in the pits, or and it's funny because I've gotten a lot of messages from like older pit traders or guys who still trade, and they're like, I like your shit, man.
Yeah.
Like, it's like. Because like it brings back.
This is what it was like.
Pits, Like there's the energy. There's the we see the emotion. A lot of the traders that day trade live, they're just sitting there going, "All right, I'm just watching this 25,000 level. If it breaks, I might get long, but maybe not. I don't know. Who knows? We'll see." So that's one thing I want to say too is like, I say this over and over, but like there is nothing more educational than like watching a trader trade live, right? Like actually explaining what they're looking for, why they're looking for. Because in hindsight, it's fucking easy, right? You can make a video, you could make a video, I can make a video talking about, hey, this is exactly where I would have bought this morning. This is exactly where I would have sold. Yeah. And it's like, but like, did you? And they're like, well, I didn't do it, but I would have. Yeah,
but you know what I think is a really like important aspect to that, and probably where the viewer gets the most value, is listening to you. Yeah. Not necessarily watching you, oh, I just bought it. It's like, what are you thinking? What's going through your mind at that decision? What's leading to that? What's leading to that decision? That's how you start to become a trader. It's starting to think like a trader, and thinking like a trader is start thinking about what's happening in the market, what's developing, what's evolving, what you think the market's doing, what you think it's trying to do, what you think the retail, your competition's trying to do. And if you're vocalizing that while you're trading, you're really helping them.
Well, because, and you know what, also, I think it really creates patience for me sometimes, because now I'm like, okay, look, guys, like, I'm looking at this setup right now, and I see there's a wick on the bottom, a wick there. This candle right now doesn't really have a wick on top, doesn't have a wick on the bottom. So, for me, I'm not really entering here because I want to see what this 5-minute candle is going to do. Yeah. Right? Because again, it kind of goes back to the idea of like I want to paint a picture in my head, because like realistically, I'm like, okay, if this is going here, okay, I want to see this pull back, push back up here, put in this, and then I'm looking to get long if we get back above 900. Right. And that's like, it might not happen. Yeah. Right? It might just it might happen, it might not happen, but at least I'm like able to just kind of like sit back. Yeah. Right. I'm not like, I don't feel any FOMO. I don't feel like I have to put a trade on here because I've already kind of told myself like this is what I want to see happen. Yeah. So I tell traders like it's not about being right. It's not about predicting. It's just being like, yeah. And I don't like this.
What's interesting as well, because obviously your channel's benefiting from all this, from this talk, is that I used to self-talk when I traded as well, and I obviously wasn't being filmed. And I just thought, again, I thought it was me, and then I you become aware of other people in a trading room talking to themselves. Wow, I really want to go long here, I wonder what's happening over in the bond market, and you're talking like this all the time, and it's helping you. And then when we started TradeDay, we used to have a forum. Do you remember we used to have the forum section? And we used to try and post information in there and education. And I remember there was a BBC news article that was covering some research on self-talk and how it can help you, with your thinking, and how it was important not just to self-talk in your mind, but to verbalize it. And I was like, oh, I'm not mad. It does help that I sit here talking out loud as I'm trading. You
definitely a bit mad.
I'm a little bit mad.
Yeah, a little bit.
You got to be a little bit mad to be in trading.
Have you ever been a trader? You're like, that guy's just a normal dude.
Yeah. When you asked me earlier, you were like, working in the city of London, can you tell somebody's a trader on the street? And I kind of made the comment that, Well, you know, back in the day, you know, when we used to wear coloured jackets, it was easy to spot. But I think today, if you saw somebody that's maybe in their 20s, looks like they're in their 40s, and they're muttering to themselves, you know, I think, yeah, there's a good chance he's a trader, you know. I think you have to be a little bit mad.
And that, you know, it's funny because I get so many people that hit me up and they're like, oh, you know, I want to learn how to day trade. Patrick, I want to buy your course. I want to learn how to day trade. And I'm always just like, I tell people, I'm like, unless you got 5 years to lose money, then don't try. Right? If your only goal is to make money in the next 6 months, then don't try. But if you're truly like, hey, I want to learn to day trade and I have no expectations, I don't care if I get rich, I just want to learn. Right? And I'm like, okay, you have potential. But the guys who message me, they're like, hey man, I need to pay my rent next month. What should I do? I'm like, go to Vegas, bet on black, you know? Like if you're I think people think that if you go into day trading, that like day trading is going to like make you rich, and also like you're going to learn how to be patient, right? Because I think like if you have problems outside of day trading, that like day trading just exuberates it, right?
100%.
I'm sure you saw it, like same thing on the guys on the floor, right? If somebody had a fucking late night, their missus is you know yelling at them, they fucking breaking up with their wife,
100%.
That's their trading is gonna be shit.
100%.
Right? And I get mad at Victoria sometimes because I tell her, I'm like, honey, like I need my peace in the morning, right? Like I need to go into trading just like happy. And like I don't need to be like, fuck, I'm so fucking tired of my girlfriend fucking bitching about me, you know? It's just like I don't want that. So I people really need to understand, like you need to go into trading like in a good place. Because going into trading in a bad place, you're just gonna exuberate whatever, you know? Like, it's
definitely. It's not just that
as
well.
It's not gonna make going into trading is not gonna make you patient.
It's not just that. It's like if whatever's happening in your life can have the ability to impact your results as a trader, you know. And it happened to me when managing traders, particularly in emerging markets where a lot of young kids are getting married early, you know, going into the wedding and things like that, you see them, one, they're distracted, two, they're feeling financial pressure, they might be feeling the pressure that, you know, and all of a sudden their results start dropping off as traders, you know. So I think your mindset, both on a sort of a macro level, you know, and that speaks to, like you said, if someone's coming in and they need to make this work immediately, that's not going to help.
James, I need to get a 1 day pass on the CVAL because my rent's due next month.
And then on a micro level, like on a day-to-day basis, right, you're coming in and you're asking Victoria just for some mental space, you know, so you can come in and start your day with clarity and not like, I don't know, you guys had a row and you're pissed off at
whatever,
her, you know, and now you're going to be like angry and your trading's going to be angry, you know. So it's really important, your mental state, both on the micro and the macro level.
I guess a good question for you guys as running a prop firm, how many, like, do you see this is I know the answer probably already, but like when you see traders come and like when traders start to go, they get on a hot streak, right? Like, oh, this trader's doing really good. How many traders get on a hot streak and then obviously get cold and then blow up, versus how many traders do you actually see traders who go on a hot streak and then go cold, they reduce their sizing, they relax for a little bit, and they go hot again? Or do you see the pattern where it's like basically just they're hot and then they're cold and they're gone?
I think unfortunately, I think it's the latter. You know,
it's a lot of it's the latter, and that's inexperience, and that's the nature of the product. I think.
I think we see the guys go on a hot streak. You know, take a lot of payouts. You know, take payouts, do well, and then blow very quickly. That point, every now and then you see that turn in the P&L, and the guy will pull back on his lot size, you know, kind of stuff.
Become so hard.
Become less
aggressive. It's hard to size down.
Yeah, it is. But we do see it. We do see it. But I mean, I think a lot of the time the mentality is, you know, just blow this and go back through the process, you know, sort of thing.
So I wonder, like, you know, if those traders who do well, and then because like you said, everybody's going to go through a cold spot, you know, like no one's going to be
nature trading
every fucking day.
It's like nature trading.
So it goes back to the idea of like the traders who are in those cold spots. Like if they had somebody kind of like working with them, managing them, being like, hey, you know, you're not trading very well right now. Like we get it. It's not bad, but like you need to like size down and you need to survive this time frame. Like for the next month or whatever it is that you're going through, like just fucking survive it. And I really liked what you were talking about with the percentage for your drawdown, right? So you start out with a $10,000 account, you have a 5% drawdown, a 2% drawdown. That drawdown's getting smaller as your account gets smaller. Right? So like you get to a point where you're like, fuck, I only got $50 that I can risk today. So the only way that I can get back to like making more money and you know, sizing up again is if I follow a plan and then I kind of like get through this curve.
Exactly.
Because now, okay, I made $50 now. You know, every day $50, $100 here. Now Now I can trade 2
The
contracts.
3% of the account size
Yeah.
continues to grow as the account grows, and it continues to
So
contract.
now
as the
I'm
account
back to
contracts.
having $1,000 drawdown because I survived through that, period.
It's a really really difficult thing to do, and we see it a lot because, one, of inexperience, I think, and two, the nature of the product, right? Like a prop firm product looks like very much like a gambling sort of product.
Yeah.
And three, I think it's not just inexperience, it's like it's counter to what your instincts are telling you, right? So you lose money and you're like, if you're trading like 5NQ and you lose 2-3 grand 2-3 days in a row, and you're sort of 6 to 8, 9,000 in the hole, the next step for you as a trader is to scale back your size and reduce your losses. But your instincts are, how am I going to get my money back trading 5 micros? You know what I mean? Yeah, exactly. And it's counter to what's inside you. So that's why it's very, very difficult.
Well, like Mark Douglas's book talks about.
Is that the Disciplined Trader? That one?
No,
it's got a couple out.
There's a couple of them. There's another one. He talks. What was the name of it? I've got the name of it now, but so one of his books, he talks about a lot of doctors and like professional people. Get into trading. And you would think that like a doctor, someone who went to college for 20 years, or 10 years, they would be able to learn how to day trade. Trading in the zone. In trading in the zone, he talks about that. He saw a lot of traders that were doctors, lawyers, people with money, that they get into trading and they think like, I went to college, I can learn this. But they actually end up being really bad traders. Because for the first time in their entire life, you're in this world where like there are no rules.
Exactly.
Right? When you go to college, you have to go to class at a certain time, you get your homework due, you got this, and you like follow the program. But with trading, it's like it don't matter how smart you are.
They're trying to intellectualize the markets, right? And that's, we saw it in our recruitment programs and professional trading groups. We would try and hire in engineers, mathematicians, and things like that from universities, and we would target bachelor's and sometimes master degrees. We wanted to raise the intellectual capital in the business because it might lead to more opportunities, and it did. But it doesn't mean that they're going to make the greatest traders. But what we found is when we tried to hire PhDs, it didn't work for us because they were just so trying to intellectualize what was going on. They found it really, really, really difficult, Well,
that's the problem too, because sometimes the market's just irrational. Right? You can be the most rational person in the world and be like, hey, there's no way the market can go higher because of all these things. But you're like, watch.
We got one of the greatest traders on the live floor, or the greatest trader on the live floor, was Terry Crawley. Terry Crawley, his son Zachary Crawley is in the England cricket team, right? But Terry was a carpet fitter. And he was in a trading room, and he was like, "What is it you guys are doing?" While he was fitting the carpet.
Oh, really? No fucking way.
Found his way down to the floor and became the biggest trader on the floor. Biggest trader. And one year he was front page of like the biggest tabloid in the country, which those from England will know is The Sun. And they were publishing, I don't know, the top 5 earners in the country, and Elton John was behind him. Do you remember?
What do you think is like a good year? Like what would have been a big year for him?
10 million.
Easy. Maybe.
Trading what?
Trading the BT.
Italian government bonds. Used to be super volatile. Like
the NASDAQ.
We went on the boat yesterday. And
Same kind of liquidity, right?
It's always those outliers are always people, I think, that find those little their little edge in some type of market, right? The question now though is like for that guy, if he came back into the world of trading, would he?
You know what he did? He was super smart. He didn't go into electronic trading. Knew where his edge was. Stopped.
So that right there. I mean, that's like proof, right? Like he had an edge in a market that other people did not have edge in. And he obviously, like, he wasn't the smart. Like he wouldn't be a PhD fucking doctor. But like he saw an edge. So I think that's 100% true.
You were talking about the PhDs and the doctors and stuff. What we've really I mean, this goes back to what was his name? Richard Dennis, is it?
The turtle trader.
The turtles. Did you know the turtles? So the turtle traders. There was they tried to get people from all walks of life, and some of the most successful, and I've seen it as well in mentoring, ex-military.
Yeah.
Why
Makes
ex-military?
sense.
Because they can follow rules.
Yeah.
You know, and that's the thing. They become
Discipline.
emotionally detached.
Yeah.
You know, have been trained to be emotionally detached, and then are able to follow instructions.
Yeah.
And they were super successful in the turtle experiment. And I've worked with ex-military, and they're good as well. And then the other thing is, and a lot of your followers and probably not going to like it, because I'm sure 80, 90+% is females.
Yeah.
Because as a man, you know, from
more
very
ego.
young, you have more ego. We are trained from a very young age to take risk, right? As a male, as a human being, you're more likely to be the one that's going to go out foraging, right? You're going to be the one, the hunter-gatherer. You're the hunter, right? And so you're more likely to take risks. You see it with young boys all the time, like jumping off of rocks into creeks, you know, or whatever it is, right? And breaking their legs, right? So we're predestined to do that. And females we're bigger risk takers as men, and females are more going to be making that home, right? You know, looking after the kids, and so they're more predestined to be risk averse. Which, as a trader, it's much easier to learn how to be a bigger risk taker than it is to pull back from being a risk taker to becoming more risk averse.
Yeah.
Well, I mean, I think it's the ego too, right? Like, we
I just saw the comment.
What?
How about the gays?
Good question.
Good question.
I'd say probably not. I don't know. Not as good as trading.
I don't know.
I have no idea.
Stop laughing, sorry.
They broke the one rule from God.
Yeah.
Don't have sex with another man. That's in the Bible. Somebody read it. So I don't know. They might have trouble taking profit or not taking profit and stop losses. I am long here. NASDAQ starting to push back up. I think as long as we can hold this 900 level, we have potential to kind of push up. The ES already back up there, the high of day. So we're just looking to see if we can get a little bit more out of it. You can see right now what we're looking at, kind of like 890 stop. I know, funny because people always give me shit sometimes for like my risk to reward.
Yeah.
Because a lot of times, sometimes I'll go negative risk reward.
Yeah.
Just because like my style of trading, like very often, like a 10-point move is gonna happen compared to, you know, that 30-point move back down, which it sounds like my ego, I guess, but it's like for this trade here, like for it to pull all the way back down to 890 is like, it just shouldn't really happen.
Right.
But I have my stop there because I'm like, well, I will get out.
Yeah.
Because it's gonna invalidate my trade, but I'm not gonna put my stop at fucking 5 points below it.
No.
Yeah.
So that's why people were like, well, you have your stop at 890, but you're long at 907. You're risking 17 points or whatever. And I'm like, yeah, but like it's like that's my hard line.
Yeah.
Right. Like a lot of times I'll move my stop up later, right? Because now I'm like, once it starts moving in my direction, I'll move the stop to a point where I'm like, okay, if it does pull back and it stops me out, my trade's invalidated.
Yeah.
So I don't need to stay long anyway. But like for me to get in at 900 and put my stop right below 900, I'm like, we're gonna get ran.
Yeah.
Just to do it. Like I always say, like the NASDAQ it's gonna get you.
Yeah.
Pretty much like wherever you put your stop at, you're gonna get.
Yeah.
So like you kind of play this game where you're like,
Yeah.
where can I put my stop at where the NASDAQ won't get?
Yeah.
Me? So I think that like if you could cut, you like almost like you want to go into the trade in this like very skeptical like belief of like, man, I want to wait until I get to a point where I'm like, I'm going to enter and I can put my stop somewhere where I know that stop just ain't going to get hit.
Yeah.
Unless it just, it
Yeah.
goes really against me.
Do you think now we've maybe made the range for the day, right? It could chop here for a lot of the day.
100%.
And then so you've got a bit of that sort of pressure to take trades. People are pushing you to take trades online.
Yeah.
And then, I'm just going to go back to, I'm a technical analyst, but I need to know my fundamentals. What do we have coming out? We have CPI tomorrow.
Yeah.
Arguably the most important piece of data, more than the employment data we had on Friday.
Yeah. No, it'll be big.
For the Fed, right? They're not going to cut in January, but for the Fed going beyond January.
Yeah.
So then all eyes are on that. So what does the market do before that? It's going to sit and consolidate.
Yeah.
So, you could easily argue, we've had the move for the day, the move's done, and then we could just chop. And this is going back to what we were talking about earlier, right? You've had 2-3 good trades already. We're in the money. What we should be doing is sitting on our hands, walking away.
Steve's trying to be my psychologist over here. Steve, I do not do psychology. No, I'm just kidding. No, I agree with you. Like I said, I should have walked away earlier. Right, because now, like, if you look at my trades now compared to earlier, now I'm taking profit earlier.
Yeah.
Right. So what does that mean? Right. Like I don't really trust this trades, or I'm just kind of trading P&L.
Yeah.
Because now I'm up. Hey, I'm up $500. Take.
Okay, so I have a question for you. Sorry.
But are you putting your stop tighter as well?
No.
So then
Right.
your risk reward's getting worse every
The chance of me
trade,
getting
right?
stopped out though is very, very low.
Yeah, right.
Oh, yeah, you spoke to ICT this morning. It's
I
like-
know where the market. Look, it's going up. Come on, come on.
Can I ask you, Patrick? I ask you something. You know, you were up, I think $3,000 at one point,
Yeah.
right? Do you feel inside you? Oh, I just want to get back there. I just want to get back there. You know, is that why you're continuing to trade? You know.
Oh yeah. No, that's I would say your high water mark for the day.
Yeah.
No, it is the worst.
Yeah.
You know what? I
It's the
I'm
worst.
fucked up in the head because I will
my
literally
worst.
like right now I'm up 3,400,
Yeah.
and in my head I'm like, fuck, I want it to be 3,500.
Yeah.
Oh, the
What a
round
weird
number.
thing. Round
There's
numbers.
There's
Yeah.
a great.
Is that a thing?
There is a thing. There's a great chapter in Market. If you haven't read Market Wizard's Guide, read some of the Market Wizard's books.
They talk
right?
about the round numbers.
The guy talks about his month end. He's going to buy a boat, actually.
Yeah.
He's a pit trader and he's going to buy a boat, right?
Okay.
And he says, if I make whatever it is, if I make $200,000 by the end of the month, I'm going to buy a boat. And he gets within $2,000. So he's got the money for the boat anyway, right? And he pushes it at the end on the
Always.
last day, and he loses like $20,000-$30,000 of what he needs, to make that last 2,000, which he's already got the money for the boat,
Yeah.
right? Because he's going for that. He's got this target, which is a monetary target. It's a number target, as opposed to what the market is able to deliver to you in that moment, right?
Well,
and there's a great.
That's,
there's a
you
part
know
of
what's
that chapter.
interesting about that, because I used to love that book.
Oh, it's
I actually don't
great
remember that, but that happened exactly almost. I wasn't buying a boat,
No.
but I had $100,000 and I had 2 days left I had 97,000. I had 2 days left to the end of the month. This is around sort of 2000 and I want to say around 2003. And I just wanted to make $100,000.
Yeah,
right?
yeah,
and at that
so
point,
right there.
I'd built my trading account up to £150,000. So at the time, it was around $225,000. And what I'd do at the end of the month is I would take a check and just leave that float in there.
A check.
A check, yeah. I mean, I'd go to the back office and say, "Can I get a check?" And they give me a check. I'll take it to the bank. And I had like 97,000 in my up for the month, and I had 2,500 to go, whatever it was, to get to 100. And I was looking and trying to make opportunity that wasn't there.
Yeah.
And I ended up losing something like, I don't know, I can't even remember the exact numbers, but I walked away with about £70,000, right?
Yeah,
so I lost significant loss over 2 days.
Yeah.
And I remember like standing in a bar, on that Friday with a check in my pocket, because I'd gone to the, the back office. They give me a check for £70,000, it's about $100,000, maybe 110. Put it in my back pocket, and I was going to go and pay it to the bank, but I had having a drink with a friend, and he was talking about how he's struggling, and I wasn't even really listening to him.
Yeah.
And I was just feeling shit, and I couldn't understand why I had 70,000 in my pocket, why I felt so bad, and I realised that. I traded incredibly badly. Instead of being like really like happy that I was like 97 up for the month and thinking, okay, there's nothing going on in the markets, I tried to force it, and I knew you shouldn't force markets. And I was trying to force P&L out of it. And when it started to go wrong, I didn't stop.
Yeah.
When I was at 90, I'm like, damn, I just want to get it back to 97 now. And then when it got to 85, I'm like, well, how much bad can it get? And like literally a day and a half later, it was 70, and I'm like,
Well, that's funny. That's every single one of your customers getting close to a payout.
Yeah.
Right? Because I do the same thing. You're like, sometimes I'll like, hey, my account, I'm qualified for a payout.
Yeah.
But I'm like, I can make a little bit more.
Yeah. That payout's 820. I want it to be 1,000.
I've got my payout locked in.
Yeah.
But let me make $1,000 really quickly, just to why?
Yeah.
Just for fun. And then that's the day you blow the account.
Yeah.
Traders always are like, man, I always get right there to passing the eval. I'm like, $5 away from passing the eval, and then I YOLO a trade and blow it.
Yeah.
So I think the lesson there, probably a lesson for you, like I said, is if you would have just traded normal, and not focused on the $100,000,
exactly,
you probably would have made $100,000.
Yeah. I mean,
but the fact that as soon as you had that $100,000, it's like, I got to make $100,000. It's just. You're taking bad trades.
Do you know what? I used to see it all the time in my own trading and traders I managed, like levels in their trading account. They get to 50,000. I get to 50,000, and I would like lose and go to 40, and I'd get to 50, and I'd lose, and I wouldn't be able to break through 50, and eventually I would break through.
It's like resistance.
Yeah, it's like a rotten door. You get through the door, and then what's on the other side? another door at 75. You know what I mean? And you get there and you start to pull back.
No,
You know, and it's like it's constant. And I think the thing to do as a trader, and hopefully, you know, it will help your audience, is know that you're vulnerable to these kind of like psychological
Triggers.
things playing out. That triggers when you're reaching levels in your account, when you're getting close to passing an eval. You know, you're getting close to passing an eval. You're putting a bad trade. It's like, okay, you know, I don't know what's going on in the market. I got it wrong. Not, I want to get that back because I want to pass the day. You know, it's like, wait for your next, you know, time when you're confident in that market, you know, fairly confident in your setup, and not try and force something. And you know, it's really difficult to do, but you know.
I like it. Quick question. Somebody asked, they keep asking it. Rule 2, funded traders are not permitted to trade within 2% of a price limit. Traders in breach of policy will lose their account.
Oh, yeah. I mean, that's a real nuanced rule.
I don't even know what that means.
Yeah, exactly. It is a really nuanced rule. So we did this. God, what was the event? What was happening? It may have been Trump announcing I think it was like, I can't remember the event, but basically, in the last year and a half, 2 years, the NASDAQ ES hit price limits.
Okay, that's what it is.
So the price limits are like, I think, 5%, right?
No,
5%.
so let me just like clarify here. So first of all, the important thing for the community to know is it's only applied to funded live, right? Not funded sim, not evaluation. And what it is the CME on all global markets, exchanges do this mostly, is like
circuit breakers.
They're circuit breakers, and they're usually on the
Yeah.
downside, not on the upside.
Yeah.
So if a market breaks down sort of 7% or 15%, whatever, depending on the product, they close the market, they pause it.
Yeah.
Right, and what we don't want traders doing is stuck in positions that they don't want.
Yeah. Especially a live account.
Yeah, and this is a true story. When I was working for Lynn Waldock, a guy came in. And Lynn Waldock was a brokerage group, a retail broker, and this is in 1992, right? And he came in and he opened an account with us with like £3,000, and he put on an orange juice contract. Right, literally frozen concentrated orange juice, and it could be like trading places. The crop report comes out, right? There's been a bad winter. This is trading places, but this is the truth, right? The market reached its price limit and locked.
Yeah.
And he called up and says, you know, he was short. He called up and said, get me out the market. And we said, we can't.
Shut.
It's shut. The market's, you know, he goes, well, we can work an order in case it reopens. And, you know, he goes, so what happens? I said, well, when it opens tomorrow, we'll try and get out for you. The next day, it opened limit up.
Yeah, limit up, yeah.
And he couldn't get out. And on the third day, he goes, get me out. And we're like, we can't. And what's more, you now owe us $1,000 because you know you're burning your. And it went on for 5 days, and for 2 of those 5 days, he had to come into the office and write a check for us to cover his position.
I disappeared.
And you know what? On the 5th day, the market opened up at a price where it traded, and we were able to cover his short position. No, I don't know. Can't remember what happened after that. But the point is this: we called him, said we closed out your position. He went, "Thank you very much," and we never heard from him again. So I think that was his one venture into futures trading.
So basically,
but that's what it is.
It's the price limit.
Yeah.
So we don't. If it's a price limit, say 7%, you can't. Once it gets to 5% move on the day, which it does, like
that's
once every 2
very
years.
rare. I would say.
I can't remember the last time index is.
We introduced the rule because of
last year, I remember that. I mean, every prop firm has that. Honestly,
And it's only the live trading as well, because that's where the risk is to us and the trader. You know,
I get it. That makes sense.
Yeah.
All right. Well, I mean, it's been an absolute epic day. We're actually going to film more videos. We're going to talk more with you guys. What?
You know what? I completely forgot. Oh no. PW. Use PW.
Oh yeah, code PW for the best deal.
For new users.
New users get 50% off for brand new users.
And that's no activation fee.
I've got a bunch of giveaway codes. We've supposed to been doing giveaways all the way through.
You got giveaway codes?
Oh no.
Oh my.
Yeah, we got giveaway codes.
How many codes you got?
I got 10 giveaway codes.
You got 10 giveaway codes?
Yeah.
All right, what we'll do is, if you're still watching, for all the people out there that are still watching, head on over there to onlypropfirms.com, sign up on the giveaways page, and we'll pick some winners here in a minute after the stream. D-Money's going to go live here in a minute. Me and Steve and James are going to film some more videos here and some more content, and then we'll post up those winners here.
Yeah, sorry about the giveaways, guys.
If not today, tomorrow. But make sure you sign up. We got those 10 accounts. The great part is we live every day. People be loving. So big thank you, people tuning in.
Thank you.
I know it was a little different than normal, but that's the cool thing about it, right? Like, how often do you get to have 3 dudes sitting around talking about trading? Just honestly, I think I capitalized on the market, made money, and just kind of relaxed and took my trades when I took them and walked away. So There it is. Big thank you. Trade Day in the house. D-Money's coming up live in the next couple minutes. So if you haven't already, hit that like button and subscribe button. You know what to do. We got a lot of action. I will not be live for the rest of the week personally. I'm going fishing. I got the biggest fishing tournament of the season happening this week in West Palm, so we'll be fishing full time. But D-Money will be live every morning. We got some more videos. We're going to ask some, I want to kind of talk to you guys some advice to give traders out there from actual people who have seen thousands of traders, fail in the prop firm. So we'll do a little videos about that in a minute. And D-Money's going live very soon, right here on the BDH Live Network. And right now, PW, the code is popping off, PW at TradeDay.com. Check them out.
Yeah.
These are the guys. They've been around the block. They know a couple tricks. You got to listen to Steve's voice every morning for free. They got more stuff going on over there. It's 50% off right now. Use the code PW for new users. If you're not a new user, it's 40% off. And then first day payout if you get above the buffer.
Yeah, that's it. Yeah.
First day payout, baby.
Yeah.
That's simple.
Thanks
easy.
for having us. Cheers, Patrick.
Yeah, man. Thank you guys for coming.
Thank
you.
And
we're looking forward to
Thanks,
more. I'm excited. So there it is. D-Money up next. If you guys haven't, hit the like button, subscribe button. Peace to the Middle East.